Good morning, members and guests. Members, let us reconvene the meeting of the Board of Equalization. Ms. Richmond, what is our first matter for the day?
Good morning, Chairman and board members. The first matter on this morning's agenda is item C, Sales and Use Tax Appeals Hearings. Item C2, Stainless Fixtures Inc. Please come forward. Board Proceedings has received contribution disclosure forms for today's hearing from the parties, participants, and agents. All forms were properly completed and signed. All parties, participants, and agents are on the alpha listings provided to your office. Each person sitting at the table will be asked to introduce themselves and, if necessary, their affiliation with the taxpayer for the record. 10 minutes is allocated for the taxpayer's opening presentation, followed by 10 minutes for the department's presentation, and 5 minutes is allocated to the taxpayer for rebuttal. Mr. Horton.
Thank you. Mr. Njija, would you please introduce the issues in this case as the taxpayer settles in?
Good morning, Mr. Chairman and members. I am Jeff Njija on behalf of the Appeals Division. The appeal before you presents two unresolved issues, which are whether any additional adjustments to the amount of unreported taxable sales are warranted and whether petitioner was negligent.
Thank you. Welcome to the Board of Equalization. As you settle in, please be advised that you will have 10 minutes to make your presentation. We would ask that you commence with your introduction for the record, and we will return and allow you 5 minutes on rebuttal. At your convenience, please commence with your introduction.
Good morning, David Berger, appearing for Stainless Fixtures Inc.
Lana Hammerton for Stainless Fixtures Inc.
Welcome.
Well, briefly, what had happened is the taxpayer provided a great deal of documentation at the auditor's request, some of which was not usual and customary in terms of what auditors usually like to see. The taxpayer had...
Sir, pull it forward a little bit
Oh, I thought it was too close.
and right in front of you.
Sorry.
You don't have to lean if you don't want. You can scoot the mic over.
The taxpayer has a fairly archaic, custom-designed accounting software program, and so some of the types of reports and things that I think the auditors were used to seeing didn't exist. However, the taxpayer provided a number of documents that supported adjustments to income, of course, oral testimony, more than enough evidence to shift the burden of proof to the state. Unfortunately, the auditors did not wish to accept that. They asked for additional things and then ignored them. Just by way of example, there was a bad debt expense that wrote off some of the sales. The taxpayer provided an audited financial statement showing the bad debt. Apparently that wasn't sufficient, and they asked for a list. The taxpayer provided a list. Apparently that wasn't sufficient. The point being that more than enough evidence was provided, and the state just ignored it and didn't accept it. Furthermore, the state then added basically at the end $2 million of sales, despite the fact that a CPA firm had certified audited financial statements showing what the sales in fact were. Again, my point is that enough evidence was provided to shift the burden, yet the state provided no reason whatsoever for adding arbitrary numbers for sales, in effect overstating sales with all evidence to the contrary. And then I'm going to let Mrs. Lana Hammerton here give you a couple of other examples because she was more directly involved.
Ms. Ham.
I did provide the, like he was saying, our journal ledgers and entries that was asked for. I even took where there was some of the items were voided out and re-invoiced. I went through because they didn't use the same item number system from one to the other, because sometimes the girls are new and they just rechange it and they use like every 5, 0, 1, 5, 10 instead of the actual item number. So I went through and marked up that so that they could see that they're the same. Sometimes they're called a waitress station or a beverage station, it's the same thing, but the auditor would say, no, they're different because they didn't say the exact same thing, things like that. I do have our IT guy, he did download it based on what the auditor was requesting with the person that came in, or over the phone with the sales board IT guy. But he also sent a letter stating, admitting that he didn't flag any of the voids or other issues that would have come up at that time. And, I mean, because there's a lot of times when there's a void, the girls would void it, or because of the way the system is, sometimes the numbers, they would start an invoice, and if they don't finish it and step out, when they come back in, the system gives the next number. So those invoice numbers would just literally be skipped or missed, unless somebody goes into the programming and renumbers it back to pick it up.
Okay, but so those are the examples. As I said, the underlying issue here is that there was evidence produced. The auditors refused it and have arbitrarily tacked on sales and, of course, the tax and negligence penalty. As far as the penalty goes, obviously there should be no penalty because there should be no addition to tax, but to the extent there might be, everything was done correctly, everything was reported correctly, and there should be no penalty either.
Thank you very much. Members, let us go to the department. The department has 10 minutes to make their presentation. We would ask that they commence with their introduction for the record, and we would also ask that they address the concerns expressed by the taxpayer relative to failure to adjust for documentation and the subsequent arbitrary addition of tax.
Good morning, Chairman Horton and members. My name is Scott Lambert. I'll be representing the Sales and Use Tax Department today. To my right is Kevin Hanks, also with the Sales and Use Tax Department, and to Mr. Hanks' right is Stephen Smith with the Legal Department. In this particular case, the taxpayer is a construction contractor. They bill their customers on a time and material plus tax. So they do collect tax from the customer. Initially, to start off, the taxpayers' records were lacking in that they had no audit trail as to the amount of sales that were reported. There was no sales tax working papers, so the department was unable to determine what sales had been reported. So even if you didn't have a sales tax working sheet, you should still have a sales journal that would match what was reported, or a general ledger that matched to what was reported. None of those matched to what was reported. The taxpayer also provided hard copies of sales invoices. There appeared to be a lot of invoices that were missing or marked as void. So the department requested that the taxpayer provide a download, an electronic download of their sales invoice record. They did do that. The department used that electronic sales data to establish the audit liability. What was found, or what was claimed, is that a large percentage of the, or most of the large contracts were voided and reported, or stated to be reported at another time period, and the department just couldn't confirm that. There were no job files that were provided, and the job files are critical to determine what actually happened on any particular job. We also requested to contact the customers and attempted to contact customers without luck. We either weren't provided with the contact information for the customer, or the contact information wasn't accurate. So that left the department really no choice other than to accept what was on the electronic sales data register, and that's what we did. I'll also point out that the accounts receivable or cash receipts journal wasn't provided, and so it's very difficult or near impossible to be able to track deposits if you do not have a cash receipts journal. So the taxpayer did provide documents to indicate that sales were reported at later times. Some were accepted, a lot weren't. What we found is there were various inconsistencies between the billings to indicate that it appeared that it was possibly another job, or that the invoices weren't reported at a later period. The taxpayer would say it was billed at another time, but then the amount of tax that was on that invoice wouldn't trace to the sales tax returns that were outside the audit period. So they'd say they reported something and they filed a zero return, and it could not have been reported at that particular time. As far as bad debts, the department did accept at least one bad debt. The other ones we couldn't accept. They didn't fall under Regulation 1642. The amounts of bad debts that were claimed on the income tax returns were significantly lower than the sales that were in question. They were minor in amount, so it did appear that the taxpayer was reporting on the income tax returns on an accrual basis, taking a deduction, but the deductions were small in amount. As far as the department using arbitrary sales, the department used the taxpayer's recorded sales, their electronic records, to establish the liability. There wasn't anything arbitrary about the sales that were used to establish the liability. They were actually the taxpayer's records. What might be meant by arbitrary is that the taxpayer gave an alternative reason for when the sale could have been reported at a later date, which was, I think in most cases, the sales were either reported before or after the audit period, or else the taxpayer claimed that the sales were voided, and the information was that the department had was inconsistent with the arguments that were being made by the taxpayer. The records requested are the normal type of records that would be requested in this audit. What was unusual was the lack of records that the taxpayer had in this particular case. They've been in business for a number of years. They had been audited 4 times earlier. This was their 5th audit. Point out that they were audited subsequent to this. It was found during that particular audit that voided sales, when we were able to contact the customer, that in fact those voided sales actually took place, and that the customer verified that the amounts were reported. And so that leads to the penalty. The amount of liability was $2.1 million. That was 87% of the amount of sales that were reported as taxable, so it was substantial in amount. The records were lacking in that it was very difficult to substantiate the actual sales, the payments, the actual sales. In some case, they provided us with records that, or in one case, they provided us with a record that indicated that there was a sale that was not in their sales register, had a different sequence of numbers. We're not sure exactly why that is. We're not sure what amounts were used to report. They collected the tax from their customers. There were no taxable sales reported in 2 periods. The taxpayer did have a history during this time period of filing late returns and also collection issues that they were having during this particular time. And the errors in this particular audit are similar to parts of the previous 4 audits, although we're not sure exactly what happened in the earliest period because it was in the early parts of the 90s. The other audit periods, there was a negligence period penalty applied in the audit that was 2 before this particular audit for clerical errors and resales that were disallowed in that period, which was also $1.2 million. So for those reasons, the department concurs with the Appeals Division decision and recommendation.
Thank you. On rebuttal, please.
Well, a perfect example of how the audit staff had no idea what they were doing. First of all, the taxpayer is not a construction company. It's a manufacturer of restaurant equipment. It is done to specs or specifications, so oftentimes these sales change, and that's the genesis of invoices being produced, and then when things are changed, they're voided and reissued. Secondly, the claim is made that no general ledger was provided when in fact it was. The job files were not provided, claims that the job files were not provided when in fact they were. The sales data was produced. Unfortunately, it does include the voids, and they had no way of knowing it other than the taxpayer's testimony and other evidence that showed where they were voided out, and again, was ignored. And as far as the accounts receivable and cash receipts, that's a good point, because when you add $2 million of sales, you would think that an auditor would want to see the cash deposits and the accounts receivable to make sure that it ties out. In fact, it was never addressed. It was never asked for. They didn't bother to check. The state has admitted that they didn't use the documentation that was provided. They acknowledged that they couldn't follow it, that there were in fact voids, and they didn't acknowledge them or use them. In fact, they charged, in effect, double sales on these invoices. The taxpayer contacted all of the customers and asked them if they were contacted by the board, and all of them said that they were not ever contacted by the board. The bad debt issue, again, that tied in directly to the certified audited financial statements and refused to be accepted. The arbitrary sales comment really was that the sale amounts are really fabricated because, as I said, they're adding sales that don't exist. As far as the negligence penalty in the earlier audits, they're pretty much irrelevant, first of all, and second of all, the state acknowledges that they're old and he has no idea what they were about or what was in them. Let's see if there's anything else that I scribbled down here. Let's see. In fact, he said something about when he supposedly contacted the customers, they acknowledged that they were invoiced for a sale. There's no mention of whether or not any particular invoice was earlier provided and voided or whether it was a subsequent invoice. Just saying, did you get an invoice and did you pay it or something like that, really doesn't do anybody any good with respect to the way that the taxpayer system works with the voids and then the with the voids and then the reissue of an invoice with a different number. It's just the way that archaic system works. But as I say, there's evidence provided in the job files, and there was evidence of the voids on the system. All of that was given to the auditors and absolutely just ignored. I speculate, but I think they just didn't understand what was happening. Let me see if there's just anything else. Bad debts were 105 one year, 115 another year. Well, that's in the files. The electronic records included all the voids and re-invoiced. As I said, the auditors had no way of knowing which were which, other than the taxpayer's explanation and additional documentation to verify that, but again, it was just ignored. Anything else from you?
Only on the voids, the only other thing I could add on there is that on the re-invoices, they did say the same job name, the same city, and everything else. I mean, the invoice itself states it's the same job, same city, has the same items on it. I mean, you wouldn't build two of the exact restaurants in the same area. You could, but unlikely.
Thank you.
Thank you very much. Members, discussion, Member Ma.
So I'm a little confused. It sounds like, I don't know what's going on. I mean, the client says they provided all the documents and, they've been keeping track, and then the BOE says, no, we didn't get anything. So what is really going on? To the taxpayer, you said you had audited financial statements?
Yes,
Can I see them?
if she has.
And are you audited every year? Or do you,
Right now, it's just reviewed.
It used to
It
be.
used to be audited
And then
all the
the
time.
bank, it's all for the banks, and then the bank said a review is fine, so they're doing reviews now. Back at the audit period, they were full-on audits.
full-on audits?
Yeah.
Okay. I'd like to see your,
Pardon me, Member Ma. To the department, have you had an opportunity to review these documents?
We have looked at the income tax returns, and we have seen financial statements. I don't know exactly what financial statements they have, but we have looked at financial statements and income tax returns in the past.
They're talking about the audit.
Audited financials.
I believe we've looked at
Okay.
we looked at financial statements. I
Well-
can't tell you if these are this.
After Member Ma has reviewed them, we'll give you an opportunity to take a look at them again.
Is that it? But you did say they asked for a list of a breakdown of it. Yeah, so they had to have seen them.
Yeah, they got them, and he asked for the breakdown on the bad debt. Got the list of that, too.
let me just read and see if there's any
Okay.
irregularities.
Member Runner.
Yeah, just quick, couple of questions there while Member Ma is reviewing those. Tell me a little more about the bad debt issue. Well, no, actually, let me start another place. And this is kind of a basic question because we look at them as a construction contractor. They look at themselves as a manufacturer, apparently. Let me go to the department. What is it that we believe makes them a construction contractor?
Installations.
The installations.
Yes.
Let me ask the taxpayer, do you do installations of your manufactured product?
Yes.
Okay, so by our definition, that's what,
It's more of a deliver and set in place, but we call it install.
you hook them up.
No. We have to hire plumbers or electricians,
You-
or if it's a full-on blown building, they already have those contractors.
In your
It's a-
contract with delivery, in your contracts, do you provide the skill to hook them up?
No, no. It's, we deliver the equipment, we'll set it in place, and then if like I said, if it's a full-on blown building, the GC's already hired their plumbers and electricians.
Right.
They come through, they hook everything up, not us.
You just deliver them and set them on the site.
Yes.
Okay. Does that qualify them as a contractor?
Well, I believe in the contract that it has the installation, but I believe it's really a moot point in
Okay.
this particular case.
Tell me
And the-
why.
And the reason is because how they're billing it is time and material plus tax. So in other words, they do have an installation charge that's billed for that.
Is that delivery charge or an installation charge?
We state it as install. We do delivery, and then the install portion separate for the guys to take it in. We've done T&M once in a while when they don't know how much it's going to cost, because they're asking, the contractor wants things on the site, so then the guys will call it in to have certain things made, and then we have to take it out there.
Some of your contracts include time and materials install and some
Our
don't?
Contracts do not, no. That's usually like on the extras or after the fact. Our contracts would include the delivery and then the install, which is, like I say, we deliver it, we put it in place.
I think it's the definition of install that's a little confusing here. What they call install is actually delivering it into the spot where the item goes. In other words, these things you've seen a restaurant kitchen,
Right,
I'm
right,
sure.
mhm,
These things go in a certain place. So they're pushed into or dropped.
They're not left on the front.
They're not left on the, thank you. They're
Right,
not
they,
left- yeah.
you actually put them in the room to which they are going to be installed.
Yes. Sometimes they're not ready to go into the room, though, so they have to.
Because the contractor who's doing the job doesn't have the site prepared.
Right, and sometimes they ask for them delivered early, sometimes we have to bring them back because they have no place to put them.
Okay, given that description,
What they're basically arguing is their total sale is subject to tax, tangible personal property. We allowed a deduction for installation, which is non-taxable.
Okay.
And we only included the amount that they billed out as tangible personal property.
Okay.
And the tax was charged.
let me
on-
ask the taxpayer and the representative, do you believe that the fact that they've identified you as a construction contractor in regards to how they interpret how you do your work affect their application of tax law?
I'm not sure that I could answer that.
Okay, let me ask you then the follow-up couple of questions with bad debt. You feel like at this point that you delivered a number of items identifying bad debt.
Yes.
What I'm hearing from the department is that what you delivered and what you identified as bad debt was inconsistent with the income tax returns. What would be the explanation for that?
I don't know that that's accurate, first of all. I mean, I heard him say it,
Okay,
but I don't know that that's accurate. I'm not looking at the tax return fees compared to the audited financial, and yes, I would want to look at that and see if in fact they are consistent or not consistent. As I sit here, I don't know that answer.
okay, let me go back to the department then. What did you see as the difference? You know, the amount to which they were claiming as bad debt and the amount to which they were, which they had identified on their tax return?
Right. On the income tax returns, we have 2 years, 2003, 2004. In 2003, the bad debt claimed was $23,000, and in 2004, the amount was $755.
Okay, given that, again, you haven't reviewed those numbers, but if those are indeed the accurate numbers, why would they not reflect the total amount of bad debt that you had already given to the BOE?
Again, not looking at it, my speculation would be that it's timing differences. The notes I'm given here, that it was $105,000 in '03 and $115,000 the following year. Again, I'm not looking at them, but, for accounting, there's allowance for bad debts and that sort of thing, which are not allowable for income tax purposes, so it's conceivable that it's just a matter of timing
Apples and
difference.
oranges. You could be an apple, you may believe, I don't know if it's true or not, you may believe that there's not a clear, that there could be a difference between bad debt definition that was used on the federal income tax versus what would be required of the BOE? Is that
Yes.
department? Have we seen an experience like that bad debt is bad debt transferable from bad debt that we identify to have bad debt identified in federal income tax?
Regulation 1642 provides that one of the requirements is that the bad debt be legally charged off as bad debt for income tax purposes.
But not necessarily in the same year. That's
Well,
why
that
I
could
think
be.
it's probably just timing differences.
Well, yeah, except the amounts are awfully different.
Well, sure, and if it was asked of the taxpayer, I'm sure the taxpayer could have provided a reconciliation of that. But it was never brought up, it was never asked.
So you believe, well, let me ask you this, I'm sorry, and again, you're representing the taxpayer, and ma'am, you are,
She's an employee, she's a bookkeeper.
okay, you're the bookkeeper, okay. Then do you believe that there were these larger bad debts claimed on federal income tax in
Yes.
prior years?
Yes,
And you could provide documentation on those bad debts for those previous years
yes,
that would identify,
yes.
that would be relevant to this, audit period?
It's just that they're 3, 4, and 5, so I have to really look for them, but yes. They should have copies even with the accounting firm.
I would think the accounting firm has that in their files anyway,
Right,
because they
right,
would have
yeah,
to
I would
do
think
that.
so. Right,
Yeah.
right. Okay. Okay, and again, if they could provide numbers that may correlate to identify within this audit period that may not have shown up in these particular audit years or years that we did the income tax review on, that would help substantiate their claim.
That's right. We did request that data, but it's not uncommon, or I should say.
You requested
it
the
is
data?
for the bad debts. There was a couple sales that they said that they were not paid.
And again, I think what I heard them say is they kept providing you things
Right.
for it. And at that point, I don't know if you asked them for their income tax for those previous years that might have shown the bad debt, right? I mean,
Yeah, I believe we did, but.
Okay.
But it is common for a sale that's reported in one year not to be claimed as a
Right.
bad debt until a subsequent
Right.
year, because usually you go through the collection
Right.
issues,
Yeah.
and so it takes a while before you're going to write that off, because you're going to try to collect it, right?
Okay. But I guess in practicality, if indeed they could demonstrate that they have that could affect then how it is that we looked at that.
That's right.
Okay.
As Mr. Smith said, under Regulation 1642, what we would be looking for is the bad debt claimed on the income tax returns, and then we would want to see a schedule of the transactions that make up that amount. So in other words, if you have down $100,000 you're claiming as a bad debt, well, we need to know what it's made of.
I would assume that would also be the same requirement that the IRS would require in regards to demonstration of that.
Exactly.
Right, so that would be a part of that. Okay,
Yeah.
okay.
So if they're able to provide that information.
Okay, well, we'll see what goes on with the rest of the discussion, but that's certainly we may want to need to take a look at. Thank you.
Okay.
Member Harkey?
Hi, thank you. Okay, I just want to clarify that the bad debt claimed would show up in subsequent tax returns, not in prior. So if you're claiming bad debt from, it's going to be the years forward, because it takes a while for it to become bad debt.
Makes
It's
sense.
not the same as it's billed, not the same day as it's billed.
Unless it could be in the same year. It could be. It depends on when the project was done and some of the communication as far as trying to collect
Yeah, well,
it.
I'm trying to help you here, because you got 23,000 showing in 2003 that you're claiming 105 for. You got $755 or a claim in 2004 that you're saying 115,000. So that's kind of an issue.
Right.
Okay, so I'm just trying to clarify things here. Okay. The auditor tested 25 large jobs, is that correct?
Somewhat correct. I think what it came down to is we actually used the electronic sales register, and then what we decided to do in order to narrow down the focus of it was to take the transactions with tax over $1,000 and there was 25 of those, and that's where the 25 came from. And that, at the time, equaled about 87% of the liability.
Thank you, yes. Only 7 sales were adjusted by the auditor out of the 25, is what my records show.
It could be in that range, yes.
Okay. This is questions for the taxpayer or representative. You state that the sale was voided, but there are multiple progress billings for which installation labor, delivery charges, and whatnot were shown. So, well, I can understand a voided sale when they're still in the planning stages, but how do you void a sale after it's finished?
Because what happens sometimes is when the project managers, like I was saying earlier, the extras that come along at the end of a project, they'll ask for stuff and it gets delivered, and the shop gives one list and the guys will give sometimes another list, and then when
Who are the guys?
the guys that are asking for it.
Your customer?
Our customers or our project managers.
Okay.
Either or. And so what'll happen is they sit down at the end and say, no, you didn't, we didn't deliver this item, or we didn't get this, or we got this, but not, So then they wind up going through it. So what happens is that they've already given it to the girl in the receivable to bill it based on what they, the list that was generated. And when they sit down and go through it, or sometimes they'll give them a discount at the end of the project, so then they mark it up and she rebills it, and she doesn't change the invoice, which is what they really should do, but they don't. She generates a new invoice, and sometimes they'll even do it sometimes with a different number set. That's what I was saying earlier.
Well, how do you reconcile that?
Because if it's been voided, we put it in the file with the other one, so it's attached to the invoice that is, that's redone against it. And then the file has every invoice for the job. So when I go through, when I've checked on the job folders, I go through and I start with the contract amount and I see that that's billed. It's usually the extras that are the issues or the problems on the jobs, is when they start doing all the extras on it.
Okay. So you say that some of these sales were re-invoiced at a later date,
Yes, and then.
but sometimes sales weren't even reported during the entire quarter on later dates. That's what we found when we were looking at. Can you explain that?
No, not really, because I wasn't doing it at that time, so I can tell you now, we go through, when the auditor came in, I did provide him with the list of what we used to run a report from our system that shows the sales for that period, and then the report that went to the BOE, because at that time it was still paper trail, not electronic reporting. So I know I gave him all of that at that time when he came in for each quarter.
You gave the auditor all of that?
Yes.
If I may, my recollection is there was a pretty big spreadsheet that she prepared on those 25 items with an explanation of each and every one of them. So if only 7 were adjusted, I'm not sure what happened to the rest. But I would think it would be in your file.
We have a lot in our files. This has been going on for quite a while.
I-
So I would like to see, if we could, I would like to see if anybody has that sheet that she provided. And I won't hold this up for that. I'll let us move on to the next. I've just, because that might have some information on it that we've been trying to because I'm looking for a worksheet or something. Cover the invoices. Okay. If we can get a copy of that report, that spreadsheet that you provided. Department, do you recall?
Well, the spreadsheets, we did get the spreadsheet. That particular spreadsheet's not going to help us in what was reported. All that spreadsheet has to do is it deals with the 25 sales that were in question. What we're looking at is we want to see a worksheet of what amounts were reported, that would help us. It also, if we saw the job file, because we never saw that on these contracts, we never saw that. We never, in a lot of cases, never saw the accounts receivable ledger on these. And so there's a lot of things that we didn't see. But on all those 25, we did take a look at the arguments that they made, and we accepted approximately 7 of them, and that may be the actual number. On the other ones, we have reasons why we didn't accept those. There was inconsistencies between what was on their invoices and sometimes inconsistencies in the arguments that they made. In other words, they would say it was billed at a later date. And all of them were outside the audit period. And then we would look to that period and we'd find that, well, you didn't report any tax in that period that you said that sale was rebilled. And they'd come back and say, well, it was actually billed in this other period that it was. So there was, a moving target that we have. But one thing of interest, maybe interest to you, is the taxable sales that were reported. And the audit for the period 96 to 99, they reported $9.3 million in taxable sales, and that was approximately 1/3 of their sales. In the period 2000 to 2002, they reported $7.7 million in taxable sales. That was 26% of their sales were reported as taxable. For this audit period, they reported $33 or $32.7 million in sales, but only reported $2.5 million in taxable sales, which is only 8%. So you see in this particular audit period that the percentage of taxable sales has dropped substantially from what it was in the prior audits. And I'd also point out that there was a difference between the sales that were reported on the income tax returns and the sales that were reported on the sales and use tax returns. The amounts on the income tax returns were higher. In fact, in 1 year it was $4 million higher. We strictly used the amounts that were on their electronic sales records instead of using the higher income tax returns figures.
Okay, can you explain any of that? The difference in the reduction in the taxable sales, all of those
Yeah, because in those earlier years, the company was selling a lot of stuff directly. Or in those years that they reported, they were doing the jobs directly, which makes them taxable. Whereas a lot of our customers now are brokers, so we sell to them and they have a resale because they're selling it to somebody else.
Did we check that these people had resale, or we can't even find the sales?
Well, the contracts at issue, there's no quite, excuse me, other than one transaction that they claim is a resale that the invoice shows tax on, there's no question on these contracts that they were taxable. The taxpayer charged the sales tax on them. But what you see is it's not reported in this audit period. They claim it's in periods outside the audit period where it was rebilled. And in the subsequent audit period, only 6.25% of their sales were reported as taxable. So it still shows that there's a minor amount of sales that are being reported as taxable.
I just have one question out of a bit of curiosity. When did you, sir, get involved in this?
After the audit.
After the audit? So you've been involved for how long?
Well, it's been going on for a couple of years, probably
Okay.
3, maybe 2.5, 3 years.
Okay, and it sounds like the bookkeeper is relatively new or wasn't involved in 2003, so you're doing things differently now?
Yes.
Okay, so you, this is not a first audit for the company. How have the other audits been handled? Were they owing and?
Yeah, well, the taxpayer representative has been involved with this company for a significant period of time and was involved in the prior audits. So as far as the liability, the prior one for this, there was just a $70,000 in computation errors. But the audit before that, there was $1.2 million in sales that were made up between clerical errors and disallowed resales during that period of time. So there has been errors in each one of the audits.
So quite an improvement in that next audit. Wow.
Thank you.
Member Barr?
Yeah, so I just reviewed just that one audited financial statements, and there were no, like, irregularities. The CPAs didn't take exception to any of their, use of accounting, GAAP accounting principles. So I'm having a disconnect saying that they don't have GLs, they don't have cash reconciliations, they don't have this, they don't have that, yet the audited financial statements by a CPA firm didn't find any of those irregularities. So
Well, what
where
I'd
is the
say-
disconnect for me?
Right. I did not say that they didn't have GLs. What I said was is that the GLs did not tie out to the amounts that were being reported. They did have general ledgers. But as I said, they didn't tie out to the records. The download from the sales invoice register appeared to be more complete. As far as that other information, all I can say is we didn't receive that information. So whether they have it or not, that's another issue. All I can say is that we weren't provided with the job folders. We weren't provided with the cash receipts journal. So whether they have it or not, that I can't say that. All I can say is it was not provided to us.
Okay, so I guess to the,
The auditor was provided with it. He didn't like our systems. That's when we had to do the download that he wanted from the board for all the sales for the AR. But as far as our ledger's thick, and if somebody asks for it, we provide it. But he got copies of parts of it, and he didn't even want to look at it. He didn't want to look at the reports we had that we had turned in for the sales tax board. He wanted it the way he wanted it so that he could see the stuff. And I do know, like I said, when they downloaded all those invoices, they picked up the voids. They weren't flagged. They picked up some of it crossed over because I had duplicate numbers, which I pointed out to him as well. There was it had the wrong customer on some of them. I showed him the invoice, and the report say one thing, the invoice said something different, things like that. And as far as job folders, he did get the job folders if he asked for job folders. We've always provided the job folders during audits that I know of.
so were you the bookkeeper at the time for this?
No, I was
Last-
not. I was called in because the bookkeeper actually had left during that time frame to come in and clean it up with them.
So were you able to reconcile your books with the sales tax audits? Or were there discrepancies in your opinion?
With the audit, when the audit went down, I went back through it. I went through and marked everything up for him. I did a total beginning spreadsheet with every invoice on it for him back when. So to show him what was off on what he asked to have downloaded. So yeah, our books does not reflect the same as that printout because there was a lot of stuff in there that we don't have in ours because they're voided. I can print out my voids, they're separate, which I told him I could.
So did you reconcile you obviously looked at your sales tax filings.
Right,
Did they tie to your books and records?
yes, they did.
I have a question.
Okay, one other question to maybe the BOE. When did your company start?
Oh, the company's been in business since, I believe, '87,
87.
yes.
So it looks like since 89, the BOE has audited the company every year almost, right?
No.
No.
We've audited them 4 times.
I mean, I went-
Up through this one.
And so was it the same problems each time? I mean, why did you feel the need to go and audit them every 3 years, right? 89 to 92, 93 to 95, 96 to 99, 2000 to 2002, then 2008 to 2011, 2011 to 2014. Like why are there so many audits, like continual audits, time and time again for this company?
Well, we've found mistakes each time that we've gone out there, and the audit two before this one had a difference of $1.2 million for clerical errors and resales. The audit after this one, they were audited again. There's a substantial liability similar to the liability in this audit. So there's a history of underreporting from this particular taxpayer. And also, I can't get into our audit selection, but I would point out that there was a low percentage of sales that were being reported as taxable during this particular period.
But then they have audited financial statements, and their auditors don't say that there's irregularities and clerical errors and, voided receipts. So I don't understand what is going on. If your audited financial statements, maybe when you do an audit and you get audited financial statements signed by CPAs, they go through everything, right? They go through all your books and records, they reconcile, they make sure, everything is in order, what they're reporting on the financial statement is, accurate. If there's any problems, they list all the irregularities and attachments on all the items they need to fix. Yet the BOE has audited them 8 times and says there's clerical errors, there's missing this, everything is reported wrong, yet their audited financial statements don't reflect that. So,
Ms. Mall, if I could just add, the financial statements that we're talking about, the audited financial statements, really have the purpose of just making a representation as to the accuracy of the financial statement, information that's contained in the financial statements, that's contained in the balance sheet. It's not a sales and use tax audit. So those CPAs aren't going to be reconciling against amounts that get reported to Board of Equalization. So our audits are looking at those records, trying to determine whether or not the amounts that they're reporting to this agency are fairly representative of what's reflected in their books and records. And what we're finding is that there's just a lack of documents that the taxpayers apparently sharing with us. I'm assuming that if they have audited financial statements, that those auditors are probably looking at job cost folders for a select number of those contracts. Unfortunately, in this situation, taxpayer is not sharing that same information with our audit staff. When we ask to see those job contracts, contract folders, those aren't presented to us. When we ask to see where's your scheduled backup that identifies how you reported amounts to us on a quarterly basis, those records aren't supplied. When we ask for a cash receipts journal to try and verify whether or not these contracts were voided and perhaps represent bad debts, that information isn't supplied to our auditors. So I think there's different information being supplied, I would guess, to the CPAs that audit those financial statements than is provided to our audit staff.
Are you a CPA?
Sir?
It's okay.
Sorry, I apologize. He's going to act like an
no,
expert. He should.
they're not auditors, they're
No, but he's-
attorneys, so,
I'm a
Sir, excuse me.
He's a CPA.
okay.
But he's talking like he knows what a CPA does, and he's not a CPA.
Sir.
I apologize.
that's,
Apologize.
Again,
Sorry.
Member Moore? Member Runner?
Yeah, just a couple quick follow-ups. Let me just say, the audits that I've gone through, our auditor has followed up on our records in regards to anything that we had liabilities in regards to those. So I'm not sure exactly what kind of an audit would ignore your relationship with a state agency to which you were filing with. So I don't know, and remember, Mom has far more experience than I do, obviously, in auditing, but from the organizations that I'm a part of that I get audited. But let me just follow up on this. The things that we say are lacking, and this is kind of a frustration that I have when we get into the idea of what a taxpayer says they provided to an auditor and then what we say we didn't get. Because I'm thinking the gap here is when you all receive this information and you're getting this, you're reflecting back on the record of what the auditor said that they asked for and got. Is that correct?
That is correct.
You didn't, in yourself, follow up to see if any of these things were ever provided.
We don't have direct knowledge of
Right.
it other than what the written record.
Yeah, which is kind of my frustration right now, is that you got a taxpayer who says, I provided that, I did that. And the auditor, and again, we have somebody, the taxpayer saying, but the auditor didn't like the form that I gave it in. And so I get frustrated then because you're representing secondhand what took place. The taxpayer is kind of reporting back on what their direct conversation was and what they provided. So, sometimes it's frustrating to me, quite frankly, that we don't have the auditor here to find out exactly what took place. Because it's very difficult then for, again, you're just reading the record. So that's a kind of a frustration that I have. And so the only when they say we provided that, the only thing that you really can say is you don't have any record of the auditor reporting that they received that, correct?
Well, that's more of a negative. There's an actual statement that said, I didn't receive it.
Right, that's why,
Yeah.
I think that's what I said. The auditor didn't say that, right? The
Well,
auditor didn't.
they indicate, well, there's indication
Yeah.
that I asked for it, didn't receive it. So it's more of a
But it could have,
positive
again,
instead
yeah,
of
I
a-
guess, but the part of the problem is, what I'm hearing a little bit is the auditor was asking a certain way that it be presented. I think what I'm hearing from the taxpayer is their processes just don't provide it in that system,
Right.
that way. And so, I'm wondering if we just have people talking past each other, in that regard. So that is sometimes I get frustrated that when we have a taxpayer who says, I did that, the auditor said this, the auditor told me this, or whatever, and then basically we have the department saying, oh, we did that, we looked at it, but in reality, it's really not firsthand knowledge. And that's a little frustrating at times, because at times it'd be good to say now to the auditor, how did you respond why did you ask them for it in a form that again, because I don't think the taxpayer is responsible for providing a certain form of the report. They're just responsible for returning the information, correct?
Correct.
Okay. Clearly from my perspective, there's a number of issues of which a lot of them revolve around specifically around the debt write-off that requires, I think, some time for the taxpayer and the department to continue on some discussions on this. But I would really also, if we end up going down the path of some more time for you all to work it out, to actually have the department firsthand review with the auditor. I don't know, was there a conversation with the auditor, or was this just?
Well, I did not have a conversation with the auditor. The auditor and the audit supervisor no longer work for the Board of Equalization. I did have contact with the auditor that conducted the re-audit, and
Okay.
I heard what she said. But, that's the problem in a lot of cases is, some of the auditors are no longer with the agency, and what we have is the record
Right.
of what they've written up. So.
Right. Okay. Well, for right now, I would ask us to move a 30-30-30 with a continued hearing based upon some of the discussion.
I would like to have a comment.
Yeah, let me ask a couple of questions.
Okay,
and then,
Go ahead.
Sure.
I think I think, given that this is the fourth audit that auditors have gone in and reviewed these books and records and came up with similar results, let me ask, would it be helpful if, I'm supportive of the 30-30-30, but would it be helpful if you had an opportunity to consult with an auditor as to what is taxable and what's not taxable? I mean, part of your testimony relative to whether you install or you don't install, you didn't charge tax on it. I'm fully aware that the department simply took your accrual account and reconciled that to the reported amounts. All this other, what happened in between, your accrual account is the amount that you said you collected as far as sales tax. So at worst, we would have an excess tax reimbursement issue, at worst, relative to the amount collected and reported in your records that they reconcile. We could also have an issue if we're going back looking at these installation charges, whether they're actual services in connection with the sale, if the taxpayer's testimony is correct, that they didn't make any installations, that those were services in connection with the transaction and not a actual installation. So presumably, and if those installation charges were not, tax wasn't charged on those installation charges, that according to your testimony, a service in connection with the sale, then the tax wouldn't have appeared in the accrual account and the department wouldn't have picked them up. And so maybe I should go to Mr. Anjija just to provide some clarification as it relates to Regulation 1642, I believe, and bad debts, because the bad debts are, my understanding at least, is claimable when they have been charged off. And so those would be reflected, the charge-off would be only the charge-off within the audit period. So the ones subsequent may also create some overlap and may inspire the agency to go back out there again if they're not already out there.
You've got it correct. With regard to 1642, it has to be charged off for income tax purposes in order to qualify as a deduction for sales and use tax purposes. There would be a timing issue in terms of when the bad debt actually accrued. It's got to be applicable to that quarter for sales and use tax to be written off. What you were discussing with regard to construction contracts, as I understand it, they're asserting they weren't doing installation and weren't performing as a construction contractor. So then your comment is if there were still services provided that they weren't a construction contractor for, services that are part of the sale of TPP are taxable. So I presume you're suggesting the measure of tax could possibly even go up. And so that prompted your question that the department could advise them on what's taxable. My understanding here is that they billed on time and materials basis and charged tax. So we wouldn't have an issue of an increase or assessing additional tax on services. It would only be the tax that's been applicable to the sales of tangible personal property. That they say that they accrued it. Whether we've got accounting errors in that process is where it would be helpful to do a 30-30-30.
All right, so,
Do you understand, sir?
yeah.
Do you understand what a 30-30-30 is? You get 30 days to dig up all the records. They get 30 days to review them all, and then they come back here. Well, we want to come back here. Isn't that kind of what it is? 30 days. You've got all this stuff that you said you had that you can prove up. And don't take it lightly, because it could work against you or for you, is what you were just told. But you need all the stuff that you said that you provided. Provide, show, and display, and let the department review it. We want to see it back to be sure that we're reviewing everything, because we don't just want this to go on into limbo. And that's why there's 30, so in 90 days, we would expect you back here with some, or a settlement of sorts, or whatever it is you decide to do, pay up whatever. We would expect it to be, within that 90-day period. So there are a lot of things you're saying that you provided that they're saying they didn't get. Well, I'd suggest that if you're you provide them now, and you document that you provided them, and quite honestly, when you come back to the board, if there's another board hearing that you choose to go through, that you provide us with something a little bit more than, hey, they were bad, or they didn't do this. We want to see what you provided. Make a package for us. This is important to you. It's a lot of money. So
I have one question on providing. Would it be on these 25, or you want it on the whole thing? Because you're talking about 6 books a year of invoices.
yeah, you'll need to discuss
5
that with the auditor.
Okay.
Okay, you decide exactly what they need to see, because you said that you have job files, and they say they didn't see job files. You said you had them, and you would have provided them. I would suggest you do provide them. You say that you have, whatever, the bad debts, figure that out. If there are voided invoices and you can prove that these are voided sales that were rebilled, prove that up. Those seem to be the major issues. And since you've been through this audit, I would assume it's not that, I mean, audits are always cumbersome, but you've had to be, you said you did all this one time, so I'm hoping you can. It sounds like there's a lot going on, but you just prove up. The burden of proof is on the taxpayer. You understand that. It's not okay if you just sit here and say, well, we gave it to them, but, you know, they didn't look at it, or we would have given it had they asked. I don't care if they ask or not. Give them your proof. Give them your proof. Because the burden of proof is on the taxpayer in tax law. So,
Okay.
they're not being mean. They're trying to do their job, and if you have any data, bring it forth. Don't wait to be asked for it.
Okay.
You prove up.
But they're gonna tell me what ones they wanna see, because as I was saying, you know,
Um,
there's six-
yeah, they can
six
get-
binders about yay big per year. There's 4 or 5 file cabinet drawers per year of job folders, so, I mean, if you
Well,
want
I
to just have them all
I
dumped.
think with the 25 files that they examined, that's what they'll want to see. And I'm not going to dictate this, but I think you can probably meet with them afterwards in a, Thank
Yes,
you.
Yes.
There's,
Right, so-
may I ask a question? There's nothing to prohibit them from having one of their auditors come out and looking at whatever they want, as opposed to her boxing up
no,
file cabinets.
that's okay too. You guys work it out. I mean, if it's real cumbersome, then let's just arrange and get it done. But what I'm saying is don't wait to be asked. Prove what you're telling us.
Well, I'd actually ask the department to make sure that they communicate clearly what it is that they believe the taxpayer needs to provide. Because I'd hate to have, again, us talking past each other.
Sure.
So I think if we can do that, then they can go on their drill of going through and finding out what that is.
Well, it's basically
let's,
7 files is what I hear. 7 were adjusted. 7 out of the 25 that were adjusted. That's where I have that your problem is.
Well, let's go back to the department. Which items did you adjust for?
Well, there was a number of them, a 7, but
And what was that adjustment?
what was the adjustment? Oh, I'd have to go through and add them up, but I don't know what the
I mean,
total adjustment.
how does that tie into the liability, those adjustments?
It doesn't tie into the liability because it's not included in the liability. Only the items that remain, the 17 items would be included. So we really don't need all 25 contracts because we've already accepted a number of them. So
Right.
we're really only the ones that
7.
issue. Now, we may need we would need the cash receipts journal for the entire period of time because we need to see the payments that were made and what went into the bank account during that particular time period. So that's going to be, we need to see exactly when the payments were made. And in fact, were multiple payments made for different jobs. And so it is a big. It's a big task. I mean, it took a long time.
Let me, Mr. Berger, you do understand that the audit liability is based on the reconciliation of the accrual account?
Yes. But if I may clarify, the original liability was all 25 when we appealed and went through a re-audit type of thing, and we did the spreadsheet that he's referring to, that I referred to earlier. 7 were adjusted, and then the the liability was reduced for those 7. Just put it all in there.
Where we are now is just a reconciliation of the
Of the
accrual
18.
account to what was reported. And so many of those, the variables, as the members have pointed out, the variables relative to the bad debt account, if the bad debt wasn't charged off against the accrual account, then there should be an adjustment to the audit. The other invoices, if your testimony is that even if it's billed time and material, presuming that the testimony is that the time was partly installation. I think I heard installation, then sales tax was part of the computation, sort of implying that the installation, which was not an installation but a service, wasn't included in the sales tax. That they would want to sort of examine those documents again and see if there's any amount that should have been accrued that wasn't accrued.
I don't know that that portion was ever part of the audit originally. I understand what you're saying.
No,
But-
I'm not even looking at or thinking about what originally happened. I'm only discussing where we are currently. Where you are currently is that they've looked at your accrual account, reconciled it to what you reported, and picked up the difference. I mean, it's a thick audit, you know, that led them, and they went through looking at a lot of different documentations that led them to a much more simpler way of coming up with the tax liability. And so if you want to revert back, I just want to make sure that, you know, that you have that opportunity. Why don't we do this, members? I'm going to ask that the department consult with the taxpayer, provide them with copies of the law, make sure that they thoroughly understand what the law says as it relates to construction contractors, time and material building, services in connection with the sale of tangible personal property, regulations 1642 as it relates to your bad debt deductions, and then through appeals will come back. If you want a 30-30-30 at that point, I think that there is wisdom in providing the taxpayer with what they want. Does that work for you?
That sounds fine, Mr. Chairman.
Work.
I'm just a little confused on the timing. So the 30-30-30 doesn't start until after they provide us with the law, or is the 30-30-30 starting and we're back in 90
Mr.
days?
Njija,
We're going to try to do all of
just-
that within
just
the
to make
90.
sure that we put it on the
I
record.
think I understood you to say you want them to do that process right now.
No, but they're asking for an explanation of the 30-30-30.
Which is needed before they leave here today, but the
You
board
can
needs.
give it to them right now.
And Ms. Harkey covered most of it, but
I
you
know,
would have.
did an excellent job.
You would have 30 days with
But he's asked again, so I just want to make sure.
with the.
Well, no, I just didn't know if the 30 starts now, or if what you just asked him to provide us is within that 30.
Well, what's going to happen now is that before we leave, you will have an opportunity to have a discussion with the department. And then you'll come back and the department will tell us that the taxpayers requested that we give them the 30-30, knowing what the law says and what the audit liability is based on. Or, you know, we can move a 30-30-30 right now. I mean, I just would prefer that you have the maximum amount of knowledge and understanding, because your testimony seems to contradict your desire to have the liability go down.
I think your recommendation is fine with us. Let's have a chat and we can come back.
Okay, thank you. Well, you won't come back, but you will communicate
Well, yeah.
through, okay.
Sometimes it's 30-30-90.
Yeah.
It is 30 for the taxpayer, 30 for the department, 30 for appeals to do its analysis, and then when that's complete, it comes back on the next available board calendar. So it's not literally 90 days before it comes back to you, but I know board proceedings enforces those timelines with some latitude.
And also be advised that the interest continues to accrue until the liability is paid. So if you have a guesstimate as to what you think the liability might be, and you want to save yourself 30, 90, 100 days of interest, you could do so that way. All right. So is there a motion to take the matter under submission? Moved by Member Stowar, second by Member Harkey. Without objection, members, such will be the order. The board looks forward to hearing from the two of you through the appeals unit relative to the 30-30-30. Thank you very much for appearing before us today, and good luck.
Thank you very much.
Ms. Richmond, let's take a 15-minute break. and we will return. Members, let us reconvene the meeting of the Board of Equalization. Ms. Richmond, what's our next matter?
Our next matter is item C6, Port Petroleum Inc. Please come forward.
Ms. Njija, as the taxpayer comes forward and settles in, would you please introduce the issues in this case?
Mr. Chairman and members, the appeal before you presents 3 unresolved issues, which are whether adjustments are warranted to the amount of disallowed claimed prepayments of tax on fuel sales, whether petitioner is entitled to relief from the tax based on prior erroneous advice, and whether further relief of interest is warranted.
As the taxpayer settles in, please be advised that you have 10 minutes to make your presentation. We'd ask that you commence with your introduction for the record, and we will return and allow you 5 minutes on rebuttal at your convenience.
My name is Douglas Wallace. I'm president of Port Petroleum Inc.
Pat Gorman, bookkeeper for Port Petroleum Inc.
And I'm Alan Thomas, attorney. My office is in Long Beach, and I represent Port Petroleum Inc.
Welcome.
Thank you, Mr. Chairman. May I proceed?
Yes, please.
Thank you. Basically, what this hearing is about is that Port Petroleum is seeking relief. They're not seeking a refund of money other than the refund of money that they're already owed that's been held. But what they're seeking relief under is a statute that allows them, when they rely upon advice by the board through an audit, to have relief. And that statute has to be read in conjunction with Regulation 1705. And I believe that because there's been numerous letters, there's been 3 decisions and recommendations, and with the exhibits that we've submitted, the issue has been fully briefed, but it in essence gets down to this. The Regulation 1705 was enacted to interpret, implement, and make specific 6596 and to promulgate in regulatory form existing board interpretations of 6596. And so there is a position that's been asserted by the department that basically the statute covers and limits the taxpayer relief. And I would submit to each of you that when that regulation became effective in 1997, it was published by the California Administrative Office. I'm sure you all are familiar with the procedures. And the department at that time submitted it and said that not only is it to interpret or implement, but it's to promulgate regulatory form existing board interpretations as 6596. And in the brief that was submitted by the department to all of you, and in the summary that was provided to you by the department or for your board summary, it references interpret and implement, but it doesn't go into the full aspects of what the department represented to the administrative office at the time that that regulation was published. So it's our position that that regulation does give the Port Petroleum relief, because back in the 1994-1997 audit, which audit involved not just a card fuel network gas station, but it started off in the era when Port Petroleum was only a fuel stop in the Long Beach port and a mini market. And what the department is trying to say is, oh, well, if we go back 20-some years, we can somehow say that, in fact, everything was done correctly at the time. So even if this regulation applies, there wasn't bad advice given because you guys did those forms correctly. And I would submit to each of you that the audit in 1994-1997 was not done in an era when Port Petroleum was entirely a card lock network station. So the methodology that was used during that process would not have been because it was a card lock. It was an audit that was done based upon the forms that were submitted at that time, and even for the audit and the SG form that there's a form, and Pat Gorman can better explain some of this detail than me, that some of the forms that the department is relying upon to say that all the mathematical calculations show that everything was done correctly back then is just not true. We would also ask that you look specifically at Exhibit 26, which deals with Regulation 1705. And that was the notice of the proposed regulation, that it does, at that time, maybe somebody knew the history at that time, but there's nothing in the record by the department that contradicts the fact that that regulation interpreted, implemented, and promulgated a regulatory form existing board interpretations. And so a person is relieved of liability for payment of sales tax, including penalties and interest, if liability results from failure to make a timely return or a payment, or such failure was found by the board due to reasonable reliance on written advice given by the board in a prior audit. That was a full audit, and we've kind of gone full circle through the original decision and recommendation, the supplemental decision and recommendation, the second supplemental decision and recommendation in terms of what that original audit involved. But the fact is that that audit resulted in the board refunding $50-some thousand to Port Petroleum for overstating taxes, so they got a credit. I would say also, just in my own advocacy for my client, why would the regulation include a failure to make timely return or a payment if it was already covered by Revenue and Taxation Code 6596? In other words, obviously, somebody in the department and the board at that time wanted this regulation enacted to explain 6596 and provide taxpayer relief in this exact situation that has occurred, where there was an omission by the department to find the errors back in 94-97 when that first audit took place. And then when the second audit took place, based upon documents that Pat Gorman can testify to, were done exactly the same as the first time around. And then when the second audit occurs and they find that you owe money because you're not doing these forms right, we don't understand on the methodology how the department can come to that conclusion. I mean, I know what they're trying to say, but it's just not true. The other fact is that James Kuhl in June of 2009, and I apologize for not being able to cite the exhibit number, but he had to write a memo to his auditors in 2006 exactly explaining how to conduct an audit for a card lock network system such as Port Petroleum. And I would submit that one of the issues is also that the Schedule G form that instructs the taxpayer on how to fill out the numbers to put on the form line 20, there's two issues on that. One, if it was so obvious to the taxpayer, why did Mr. Kuhl have to write a memo to explain to the auditors how to do their audit in 2006? Why didn't he just tell the auditors, go reread the instructions? And our second point is that the instructions that were provided to the taxpayer were representations by the department, by the board, saying this is how you do the form. And Pat Gorman followed the instructions and procedures. And one of the interesting things that the department has conceded, I think, is the fact that they can't find the instructions on these forms predating, I think it's 2004. And if that's the situation, then we don't know what those instructions were on those forms in 94 to 97 that were subject to that first audit. And the fact is, for the second audit, which is what we're before you now involving, Pat Gorman prepared the forms exactly the same and in conjunction with the instructions. So what we're saying is, and what I find remarkable that the department would bring to the board and argue is, yes, the plain English rule definitely applies to regulations. There's no question about that. But what we've presented to the board, which I also find remarkable, and I agree that the Attorney General's opinion, you have your own set of lawyers and you can take it or leave it what the Attorney General says. But in my profession, the Attorney General opinion is given some weight about what forms should be, how forms should be written. And we've cited that Santa Barbara case that basically says when a form is enacting a regulation, which enacts basically a tax, the form should be written in plain English. And it's, to me, I respectfully submit that it's absurd to say that forms for taxpayers should not be written in plain English so they can do the form correctly and the state can get the tax money. So for the department to come in my opinion, and say, somehow argue lawyering, that the form, if it's confusing or isn't prepared right because the instructions aren't adequate, somehow doesn't have to be in plain English, I don't think that is in the spirit of the law or is consistent with the law. I would also quickly move forward to the relief from interest, which is a huge part of the delay that has occurred in this case from when not just the audit occurred, which basically the department has now changed their position, I think, twice. First, they just gave interest during the delay in the audit. Then they gave interest relief during the time that I believe the appeal was being written. But basically, Jarrett Noble was the first lawyer assigned to this matter. We went to the appeals conference August 29, 2012. And under the department regulations, they were supposed to ultimately get that decision out in 90 days. And yes, I think I asked for a couple weeks. I think I was in trial or something. I think they needed some more time. But then this thing just kind of morphed forward to here we are today, 3 years later, two basically amended decisions. And I appreciate the fact that maybe some lawyers work slower than others, but the fact is, when it's been with the appeals unit lawyers, this thing took over 2 years to get us to this point. And one of the delays that I think is ignored by the other side is the fact that all I told the board or the department at one point was that Mr. Douglas's business, the Port of Long Beach, needed his space to put a pylon in for the new bridge, so they took his business over by eminent domain. And I was trying to urgently basically move the thing forward. He wanted to close this matter up. And they use that as another excuse to delay. And I don't believe, I've asked for public record requests to get internal memoranda allowing for further extensions of time, and there haven't been. So what I'm saying on the interest relief is the fact that I think there's 2,700 days from start to finish, and we're asking for relief of 1,144 of those days. So I don't know if that's 40-some percent or thereabouts. But I don't believe the taxpayer should be penalized in the sense of interest, and I realize it's not penalty, but the delay, if I ask for an extension because of holidays, Thanksgiving, Christmas, all this stuff that's been used as an explanation for delay, I realize you all know this process, and I realize you deal with the organization on a daily basis. But the taxpayer, we tried to promptly respond to everything. We tried to give every document that was requested. I acted as promptly as I could. And I don't believe we got the same shake from the department. And I'm not saying they're bad. I'm just saying that's reality, that the Port Petroleum should at least be given interest relief during the time that the appeal process waiting for these decisions and recommendations have been written. So that's basically the three issues are the original audit misled the taxpayer to continue to do the forms in the wrong manner. The regulation allows for relief, and if you don't agree and go with the department recommendation on those points, I would ask that you give strong consideration to further interest relief during the time that there's been these delays with the department lawyers writing these additional briefs that really never changed their position. Their position has been the same from day one in terms of talking about the statute, not giving relief, talking about the regulation, not meaning what it says, and basically only giving interest relief for the time that the auditor delayed the audit, but not recognizing that they themselves delayed unreasonably and affected the taxpayer. So I thank you for your consideration and appreciate the opportunity today.
Thank you very much. Members, let us go to the department. Department has 10 minutes to make their presentation. We'd ask that they commence with their introduction for the record.
Good morning, Chairman Horton and members of the board. I'm Andrew Quee with the board's legal department. With me today is Larry Mendel, also with legal, and Kevin Hanks with the Sales and Use Tax Department, and we will be representing staff. The amount at issue in this appeal consists of $186,000 in sales tax prepayments that petitioner collected from its customers under its fuel suppliers account and then deducted as credits on Schedule G of its retail sales and use tax account. I would like to start by clarifying precisely what amounts were disallowed in the audit. The title of the disallowed Schedule G credit is Sales Tax Prepaid to a Fuel Supplier. However, the disallowed amounts at issue in this appeal do not concern any amounts of sales tax prepayments that petitioner paid to a fuel supplier. At the time of purchasing the fuel, yes, petitioner paid sales tax prepayments to its fuel supplier. However, petitioner claimed, received, and reallowed a credit for 100% of the sales tax prepayments that petitioner paid to its fuel supplier on Schedule B of the returns filed under petitioner's fuel supplier's account. This is not at issue in appeal, and this was not disallowed. So I'm going to move on to what is at issue. The issue is what happened next. What happened when petitioner sold the fuel? This occurred later. When petitioner sold the fuel, petitioner collected prepaid sales tax from its customers on resale transactions. The issue is that petitioner is statutorily required by Revenue and Taxation Code Section 6480.1, Subdivision B2A, to remit these amounts to the board. Instead, petitioner claimed an additional Schedule G credit under its retail sales and use tax account, which is an entirely different account, for the amounts of prepaid sales tax that petitioner had just collected from its customers under its fuel supplier's account. The title of the Schedule G credit clearly states what is creditable. The title is Sales Tax Prepaid to Fuel Suppliers. In other words, the title of the credit is not sales tax collected from a fuel supplier. Further, the statute also provides that the amount of sales tax prepayments paid by petitioner's customers shall constitute a credit against his or her, that is the customer's, sales and use taxes due and payable for the period in which the sale is made. Therefore, there is no legal authority for petitioner to claim a credit for these amounts, and the statute provides that only petitioner's customers may claim a credit for these amounts. Petitioner also claims relief under Revenue and Taxation Code Section 6596 based on reliance on a prior audit. Section 6596 is inapplicable for multiple reasons. First, the statute clearly provides that in order for Section 6596 to apply, petitioner must either fail to charge or collect tax from its customer or fail to pay use tax on petitioner's storage, use, or consumption of tangible personal property. Neither of these scenarios apply because petitioner actually collected all the tax at issue from its customers. Thus, we do not have legal authority to grant 6596 relief. Second, the prior audit correctly ascertained the liability. The department has reconciled petitioner's accounts for the FBO audit period, and the audit reconciliation schedule shows that, dollar for dollar, petitioner reported the correct amounts on its amended returns, and petitioner did not claim and was not allowed a Schedule G credit for any prepaid sales tax collected from its customers. This reconciled dollar for dollar with the audited allowed Schedule G credits in the prior FBO audit. Thus, the prior FBO audit was correct. Further, the department's reconciliation schedule shows that we did not allow petitioner any Schedule G credits for prepaid sales tax collected from its customers in the prior 1994 to 1997 audit either. Finally, the department believes that petitioner knew how to correctly report the tax. The evidence that we have demonstrates that petitioner had actual knowledge how to correctly report its liability. Specifically, the department discussed the findings of the prior audit with petitioner at a meeting held on February 19, 1998. After the meeting to discuss the audit findings with the department on February 19th, petitioner filed amended returns dated February 19th, 1998 and February 20th, 1998, the next day, for the remaining 3 quarters for the reporting periods up to the date of the meeting. These amended returns did not claim any credit for any prepaid sales tax amounts that petitioner collected from its customers. The same person who signed the amended returns also represented petitioner in the current and all the prior audits. In response, the department conducted the FBO audit for these last 3 quarters and determined that petitioner did, in fact, overclaim the Schedule G credit and billed petitioner approximately $9,000 in tax for the erroneously overclaimed Schedule G credits. So, in essence, petitioner is asking the board to refund sales tax prepayments made by another taxpayer, and these amounts have already been claimed and paid and credited to these other customers, the persons from whom the tax was collected. Therefore, we don't have authority to grant 6596 relief, and we request that the appeals be denied pursuant to the Appeals Division's recommendation. Thank you, Chairman Horton.
Thank you very much. On rebuttal, please.
Thank you. I think it's remarkable that there's no further discussion about the Regulation 1725, but I will move on to, or 1705. The fact is that the first audit in 1994-1997 did not have all the documents that were reviewed that the department is now trying to say shows something that they don't show. I have a memoranda to Ms. Chin, who was the first tax counsel that took on this after Jarrett Noble moved on, and it's from Kevin Hanks, who you obviously all know, and it's a memo dated February 10, 2014, and it's in my exhibit book 18034, 18035, and 18036. And he wrote in there in this memorandum to Ms. Chin, it says he's talking about these 1994-1997 documents. And he says the only available schedule from the prior audit is Schedule R21G4, Title G, Schedule G, Sales Tax Paid to SG Seller, Summary of Differences. This schedule shows that there is a difference of $4,009 between claimed sales tax prepayments to fuel suppliers of $455,584 and audited sales tax prepaid to fuel suppliers of $4,559 or $459,564. And then, in continuing, he writes, however, the schedule does not include any comments explaining how the petitioner computed claimed sales tax prepayments or how the auditor established audited sales tax prepayments. Thus, there is no written evidence that the prior auditor examined the issue of claimed sales tax prepayments. That was in the era when the department was trying to say that we don't know what the 94-97 audit involved. We had presented evidence that it was a full audit. There was no mystery about what business Port Petroleum was operating when the auditors were at the facility. And everything was available to come up with the fact in 94-97 that apparently these forms weren't being prepared correctly. So what we're stating is that by the auditor conducting a full audit and not finding the errors that were ultimately found in the second audit, that was a representation by the department and the board as to you're doing okay, your documents are fine. If it had been a limited audit, that would be a different story. But then to top that off, they come up with a credit and it goes to the board and they get money back. How much more can a taxpayer believe that they're doing things correctly when they get money back from the state of California for overpaying their taxes? And again, I have to state, and I will temper what I was going to say and just say this. There was an inference in the board summary that somehow these folks have pocketed this money. We presented a supplemental declarations under penalty of perjury, both Douglas, who was the sole shareholder, and Pat Gorman, who had financial access to their books and records and monies, that they didn't pocket any money. All the money that they've collected in sales tax was paid to the state. So somebody came up with, in your summary, that somehow it would be unjustly enriching them to not grant them relief, but they haven't pocketed any of this money. All the sales taxes that they collected have been paid. So that inference about getting money back, the state of California presently owes Port Petroleum $121,686.55. And that's because of this delay, they've lost use of that money. Apparently, they don't get interest on their money. But, and no offense to anyone, the state, you don't write the laws, the legislature does. The state gets interest, they don't, but the state's been sitting on their $121,000 that's going to be used as an offset. And to top that off, because the port took his business location over, everything, this is the only issue remaining for Mr. Douglas to resolve. He's a retired school teacher. This business was with his sister. He bought out his business. He has a serious health problem, and he wants to get this resolved. But the fact is, now the state is sending him personal bills to get this money personally from him, and this corporation was entirely operated correctly. There's no piercing the corporate veil here. I've told the State Department that, hey, this is subject to an appeal. It hasn't been resolved, and I still get these bills at my office, and I've communicated our position, and it's just ignored. And so, in short, this is the way I think this whole experience has gone from day one. If you have questions, Pat Gorman is the lady who kept the books, knows the numbers, and apparently didn't do the forms the way they ultimately should have been done. But she's the one that relied upon the first audit, not finding a problem, and she relied on the instructions that were not in plain English to fill out the forms. So we would ask for total and complete relief. Thank you.
Can I speak?
No, report through.
Okay, thank you.
Thank you, though.
You're welcome. I just wanted to provide an opportunity if you wish. Discussion members, Member Stowar.
To the department, would you provide me with the dates again of the first audit? The
Oh.
date that the minute return was filed? I think you said something about a field bill, FBO audit,
Right.
and then the audit for the period of issue.
Okay, so there was a field audit from covering the period July 1st, 1994 through March 31st, 1997. And then after that, there was an audit covering the period April 1st, 1997 to December 31st, 1997. And so what had happened was when the department met to discuss the results of the prior field audit, the documentation says, quote, meeting with Pat Gorman, the assistant Marina, and Sally Fetterflace discussed audit findings with Ms. Gorman. And that happened on February 19th, 1998. And the next day, the petitioner filed amended returns dated February 19th and February 20th, 1998, accurately reporting the tax. In those returns, she had reported that she overclaimed the Schedule G credits, so we issued an FBO audit billing her for the overclaimed Schedule G credits, and the result was a billing of $9,070.27 in tax.
Okay.
Mr. Runner.
I'm just interested in regards to the 6829, following up in regards to that, and I'm, yeah, you know, that at least that's what it sounded like was taking place prior to a determination here. How would that take place?
Mr. Renner, I was equally concerned. I've sent a message to my staff inquiring about that. I'm not aware of a 6829 responsible person liability that may have been issued. I don't know if petitioner is representing that we attempted to collect from the corporation. Perhaps that's what he meant. But it's
Let me
an
ask.
ongoing
Let me go and
petition.
ask the taxpayer representative what the issue there was. It sounded to me what you described was a billing for as a responsible party,
Right.
Under the corporation.
They sent us forms to have all their employees prepare for, I mean, the employees were obviously not principal decision makers, and Mr. Wallace is the sole shareholder.
Right.
So yes, we are getting that responsible bill.
A bill or information?
I believe it's a bill. I don't have it here with me, but I'll be happy to share it. It looks like a bill to me.
Let me ask Appeals. Looks like he's shaking his head.
If I'm reading it right, it's a determination for 6829 liability issued December 31 of 2008. I don't know the status. I'm trying to find out.
Would that be for this? Would that be for this particular audit period?
It's the amount, I believe, sir,
Same amount?
that is subject to this.
It is, and it,
Okay. Procedurally, that would be incorrect, wouldn't it?
They didn't terminate their business until June 19th, 2013, so I'm not sure why there would be a 6829 billing covering issued prior to.
But we don't. We must agree that one exists right now, right? I'm hearing from Appeals.
We're trying to find out. So
Okay.
I don't know the status of the 6829, I'm sorry.
We're not sure, I think, what the 6829 is actually for.
I might recommend that we allow them to figure it out instead of trying to
do it on the
speculate, and we'll continue the process.
And I might clarify, a 6829 billing might be of concern, I understand, but doesn't affect the liability of the corporation that we're deciding today. So whether or not that's happened, it still doesn't change the question before this board.
Procedure would be unusual.
to the extent that if the NOD for 6829
For instance, willfulness. How do you do willfulness if there's no determination?
Mr. Renner, if I may.
Well, let me ask this.
Billing's not final.
Right.
So-
We've got a petition here.
Shouldn't be
Right.
There's
any
still a liability
collections.
that's incurred, but we don't have the 6829 in front of us. That's all I'm trying to clarify.
Okay, but just to, again, help me understand the process a little bit. In order to issue that, we would have to demonstrate willfulness.
In order to reach a determination, yes, but if the department believes all four elements are met, they can issue a notice of determination for 6829, even if the corporation liability is not yet final, or even if
Okay.
even if an NOD wasn't issued
Okay.
against the corporation.
Okay, thanks. I may have some other questions. I just wanted to clarify what was going on with that.
Thank you, Mr. Renner. Member Harkey.
Well, I want to clarify a few things too. So, as I understood from the testimony, the state is holding a refund for $121,000.
Yes.
Where is that from? What year is that from?
Well, it's from $35,017.49 for the audit in question. And then there's $24,120.45 for overpayments. There's $16,031.54 for offsets to SG returns. And then the most recent audit, 2010 to 13, resulted in a credit of $46,517.07.
Okay. So, and we are asking them to pay $151,193 plus interest?
Correct.
Okay. Do you want to respond to that? Thank you.
I have just a quick clarification. I have a copy of the report of the field audit for the subsequent audit. It disclosed a liability of $127,000 in tax. We issued a notice of determination on that on April 28th, 2014. And in that subsequent audit, we actually discussed the Schedule G issue, and it determined that a refund of zero was it says that, quote, documentation for verification disclosed an actual claim amount of zero, and the letter that we mailed to the taxpayer explained, unfortunately, you have overstated your Schedule G credit compared to your fuel supplier sales reported on Schedule A, so I'm not sure.
So the $46,000 is not, you're claiming is not a refund?
The subsequent audit disclosed a liability, net liability, not a refund.
And the net liability was what?
$127,000. And then there was a payment, there was a partial claim that offset it for $10,000, resulting in a net deficiency of $116,000.
Ms. Harkey, can I have Pat Gorman respond to that, please?
Sure.
I can't respond to that. I can only respond to the fact that in that prior audit, nothing was done, and we weren't done as a card lock, and their own paperwork to the board hearing on August 27th, 1998, they still did not refer to us as card lock, and we were in that prior audit. We were both. We didn't become card lock until 1995. So for the first year of that audit, we were a gas station mini mart. And there's no correction in their audit for that. And also, Ms. Norton, who did the audit in question now in the appeals, she clearly stated that that audit was done with the wrong methodology. It was done, the method of doing that audit was incorrect and inconsistent with doing a card lock. So I can't answer all the numbers they're saying, but I can answer that the auditor who did the second audit, the one that
2010 through 2013?
2006 to 2008, Connie Norton, she did that audit, and she had the paperwork for the prior to 1994, 1997, and she clearly stated on May 10th that they used the wrong method to audit a card lock. So I was there. I know that all the documentation they sent to us for me to look at was a lot and hard for me to understand it all. And I took it for further explanation of those exhibits, and those exhibits proved not to state what they were sending us. It was over my head, but I understood what the other party told me. And again, what he just said, we did do the 2010 audit to the close of business. In that audit, we did correct that line, the line 20 that's in question on the prepaid. And we still have a $46,000 credit in the audit, along with the $16,000 from offsets to the SG during that period, and then 20-some thousand of overpayments. So all I can tell you is in the audit in question, 2006 to 2008, Connie Norton also did a reconciliation of all the monies we collected and proved that we not only paid every penny collected, we paid more, over $13,000 more. She was very aware there were other problems. She had taken this audit on after it had been dropped by the original auditor, Kevin Nguyen, who admitted he was not capable of doing the audit, nor was she, because she had to get further instructions in 2009, and that turned out to be 9 pages of further instruction that I never saw. When I went to start the new audit period, the 2010, Connie Norton told me to contact an Eddie Iowa, which I did, and he wrote instructions that are totally nothing like the instructions on any of the forms that I followed. The forms always asked for my prepaid. Even on the SG form, line 20 doesn't even refer to further instructions. The other lines do. If there was a case for me to look at further instructions, I would have. The line 20 clearly says enter your prepaid. It also says see Schedule G and put your total of G5 on it. On that schedule, when I looked at it, it tells me to read the instructions. The first line tells me this schedule must be completed by all sellers of fuel subject to prepaid. That was me. The next line down, where I entered all of that, says credit for sales tax prepaid to my fuel suppliers, not sold, not collected, prepaid to my fuel suppliers, which I used. It also says see instruction G2. And in instructions G2, it says summary of tax prepaid to my suppliers, not collected, not sold, as he inferred. So I'm a bookkeeper. I followed these instructions. I told Connie Norton, even after her audit, saying that line 20 was incorrect, that I couldn't just change and falsify what they were asking for on that line. I needed her to write down why I needed to make that change, so I had it in writing. She couldn't do it. She said, I have asked for further instructions that I've been given, and I can't answer that. Please contact Eddie Iowa. When I contacted him, his instructions read, when you have both an SR and an SG account, your SR account can only purchase fuel from your SG. All fuel suppliers for tanks should be reported on your SG account Schedule B. When fuel is sold, it should be reported on Schedule A. Again, on an SG return that never is referred to on these instructions. Line 1 on Schedule A should be sales you made to yourself, your SR account, then follows by sales to others. The sales you made to yourself, sales to your SR account, is the amount that goes on your Schedule G, line 20. So these instructions I understood, and I made the correction or the amended line 20. But on the returns, None of those instructions ever told me that. And I did it according to the instructions. They asked for apples, but they wanted oranges. And they don't want to admit that, but it is true.
Thank you.
So,
Also, I don't know anything about an FBO audit. And they said I talked to someone. If I did, it was on a phone call. It was not someone meeting with me in any office, giving me any further education or training that would have me falsify the reports or the line that I was asked to do. That's it.
okay, what I have here, I understand that, and I'm trying to figure out where we are with the dollars and cents owed versus the dollars and cents to be refunded. I thought that was important. But what I have here in our analysis is that petitioner, which is you, were reimbursed for all of the prepaid sales taxes it paid to its fuel suppliers, plus the $186,211 that you contend you're allowed to keep. So that seems to be the problem. It's almost like it's,
Well, what we are, I'm sorry.
that's okay, go on.
What we're stating is, we did get reimbursed the foreign prepaid. That was just a reimbursement, it was a wash. When we came over to the SR return, line 20 asked me to put my prepaid there again, which did overstate my prepaid. But later on, and even in Connie's own audit, she stated there were many other problems. And when we did the third audit, which is the 2010 to 2013 close of business, that audit was done correcting line 20. And we still are overpaid just in the audit principles over $46,000, not taking into consideration the offsets of the SGs or the overpayment of the $24,000. So what we've stated is, we made your correction, but it's clear we had other problems. In that third audit, there were many problems presented. There were calculation errors, measure errors, overstating sales errors, and most of all, district errors that Connie Norton in her audit never looked at. She would have found we had overstated districts, again offsetting that 186. And what the 2010 audit proved, and also most important, I think, was Connie Norton's analysis of our collected sales tax. She proved that we did pay everything we collected. Unfortunately, there were so many other areas that were incorrect, that were not looked at, and certainly not considered by any of the appeal board people, because they knew we did it correctly in 2010 to 13, and we're still way overpaid. None of that's been considered. And the fact that the first audit, that they keep, first of all, in that first audit, they denied it for several years when they had it all along. They even went as far as to deny it and say they lost it. That's all in their own SDNRs. Because they just didn't want to, because they wanted to say originally, you were audited as a gas station. Therefore, you can't rely on that audit to say when you're now a card lock. Well, we did rely on that. We know they looked at the SGs. We know they looked at our general ledger. We know they looked at everything. Well, 4 years later, they realized that, and they come back with schedules and documents and this FBO audit that I don't know about, stating we did know. And I am aware of conversations I've had that I did correct a return in 1998. But that verbal correction, to me, was a calculation error, certainly not an explanation of changing line 20
Okay.
when the whole instructions had to change.
Okay, I think I understand what the issue was. You're relying on a previous audit. The department is saying that you were a gas station, so you can't rely on the previous audit because it wasn't for the same thing. That's part of the problem. The other part is, for me, trying to figure out, okay, this is for the department. Department, if they were to issue a check to you for all that you say you owe them today, what would they get back in refunds?
Ms. Harkey, the amounts that we have before us indicate that we've got payments against the liability that was calculated at the $151,000 tax and the $44,000 in interest. So the information that we have before us shows a balance due for this liability of $109,000. There may be other amounts that
Are we, the state of California, holding up refunds through this time period? Is that, I'm asking, is that what we usually do?
I'm not aware of us holding any amounts.
Well, they say we've got
other than what we have here.
35,000, 24,000, 16,000, and 46,000 to roughly. So I just kind of want that to be verified. So if somebody could just get back to me and let me know if we're holding up anything. I don't have to have that right now, but we can go on.
Okay.
Thank you.
Further discussion, members?
If I could quickly correct one of the things that I had said earlier regarding the 6829 determination, I misread. It wasn't issued on December 31st of '08. It's for the audit period ended December 31st of '08, which is the audit period that's at issue here. It was issued on September 2nd, 2015. It is final. There was no appeal that was filed, and its collection status is on hold pending the outcome of this appeal.
That's not, I sent a letter back and I asked for an appeal, and then they just keep sending me bills. And I felt in good faith that this matter is still pending, and that it was harassment without a finding, that he's personally liable on that, this number that's in dispute. But I definitely respond on behalf of Mr. Wallace, and to say that this is now in collection without recognizing that we have a contested matter, and we most certainly will contest it, and we did send back a response stating our position. And I think somebody pushed a button, based upon the fact that that the business closed down, somebody pushed a button to send out that bill, and I don't know what motivated that person to do it, but I don't think I just think it's really shocking under Mr. Wallace's rights that he's proceeding in this proceeding in good faith, providing all the documents to state his case, responding to the department's legal positions, and then to have a side war going on this, sending out that he owes this money personally is incredible.
Okay.
Thank you for listening to me.
Well, I just want
Member
to
Runner?
quick follow-up, because I'm not sure how to separate these two, since they are basically dealing with the same audit. They're not dealing with, well, they're dealing with the same liability. How, again, is that a normal process? Do we have a normal process for us actually doing a billing under a 6829 while somebody is actually still in appeals?
Mr. Renner, there could be a review as to whether or not 6829 billing might be applicable. And of course, we're aware that there's a statute of limitations that applies to that process. And so if the closeout date was long enough ago, then yes, our staff could look at the case.
Does the
from the
statute of
standpoint
limitations apply to, does it apply to the audit or to the point of determination?
It applies to the closeout date for the business. So it applies within 3 years of the closeout of the business. So if the business closed out many years ago, then that would be a case that might be ripe for consideration of a dual liability.
But does that mean we actually initiate the liability, or do we have the ability to just, to collect on the liability, or we just have to initiate the liability?
I believe what the explanation Mr. Angija provided is that it is not in collection. It is pending collection on the outcome of this case.
Okay.
Because what we
So there is a
billed him
billing,
for-
but there was a billing done.
They have to preserve the statute of limitations. There's a compliance policy manual section that requires a 6829 notice of determination to be issued within 1 year of the expiration of the statute of limitations on that 6829. In other words, they've got to protect.
So the other issue that seems to be at least unresolved is the fact that we did a billing based upon the fact that there was not an appeal filed. Is that what I understand?
A notice of determination is issued. He's saying that he appealed it.
Right.
The records showed that it's not, whether the department.
So that's another issue that
and
will have
if
to
the
be
department
resolved.
accepts it as an
Okay.
administrative protest. But again, none of that bears on the question before you
Right, that's
today.
another issue. Okay, thank you.
Well, the only, if I may though, only answer the question, just so we're not misled here, that the corporation is still open. They may have done their last books in terms of income tax returns, but the corporation is not officially dissolved under the corporate code, and in fact will not dissolve until this issue is resolved.
Well, let me ask you.
So-
Let me go back real quick to the department. Then, is the statute of limitations on the close of the business or the close of the corporation?
Close the business activities, close of the activities for which they're required to hold a seller's permit.
So they can close the business, still have an active corporation, and therefore the statute could begin.
If the corporation is no longer permitized in some way by us, then we consider the business activities to be
Okay.
terminated.
Okay.
Member Maha.
Okay, so first off, I think this is another issue where it would be nice to have the auditor present to really understand, what's going on, number one. Number two, dual determinations. We've been having issues with that where one hand doesn't know what's happening with the other, and taxpayers are getting notices, yet there is an audit going on or an appeal is going on. So somehow we need to, figure out, I know decentralization is being discussed in dual determinations. And then third, it seems like this area is very confusing. That in 2009, Jim Cool, who's now my chief deputy, had to write a 9-page memo on how to file these forms and what has to go on each line. Seems like there's a lot of confusion over these forms. Can I just ask the BOE attorneys whether there's been a lot of confusion over these forms or not?
It's not a simple area because they are running both a retail and wholesale business. Previously, according to them, they were just a retail seller, and so they only paid prepaid sales tax to their suppliers when they bought gas, then sold the gas, and then got a credit. But now they're both a wholesaler and retailer, so they both pay prepaid sales tax, and they collect prepaid sales tax from their wholesale customers. The credit we're not giving them right now, because they're not entitled to it, is not prepaid sales tax they paid, but what they collected from their suppliers, paid to us. We gave credit to the retailer that actually sold the gas, and they now want an additional credit on their side. But it's not a simple area because they're running essentially two different businesses, and they're selling to themselves. And so it's just inherently confusing.
Okay, so in the last audit, the prior audit, 1997, they were in this line of business, the card lock and wholesaler, retailer. Did you do a full audit? And what does a full audit mean?
So there were two prior audits. One was a field audit, which is from 94 to 97. And then after that was a field billing order, which was for the last 3 quarters of 1997. So the 94 to 97 was a full audit. The subsequent 3 quarters was not a full audit. And Kevin, could you?
Right. Ms. Muller, a field billing order is a limited review of certain transactions, so it wouldn't encompass a full audit per se. So in this instance, what they did do, however, was a reconciliation of the prepaid sales taxes. And what we determined was that the taxpayer was reporting absolutely correctly after they had filed some amended returns for these 3 quarters. So the nature of this review was to determine that the amended returns were filed correctly, that the forms are properly prepared, and that was verified and vouched by our audit staff.
So since 1997, as I'm hearing, the taxpayers, given that they went through a full audit, a field audit, field billing, that they continue to report the same way up until this last audit. Is that my understanding?
Yes.
The problem is they're doing business differently now. They have an aspect to their business now that they didn't have then.
No.
Is that correct? I'm sorry. Go ahead.
If I may clarify, I believe they began fuel card lock operations, which is when they obtained the second account, the fuel suppliers account. I believe that happened on June 1st, 1995,
Right.
which was 1 year into the first audit.
Okay, so then, to the taxpayers, so then you tried to clarify whether you were doing things right? I mean, was it related to this specific, is it line G?
Yeah.
Schedule G?
Schedule G, line 20 of the SR, Schedule G of
Okay.
the SR. But in that audit that they're referring to, we were both types of business. And the audit I want to use the right word, the correct method of auditing us as both businesses was not done. The method they used was incorrect per Ms. Norton, who is an auditor, their own team. She clearly stated the method they used was incorrect. Now, this field billing audit they're referring to, they may have made a phone call to me, because I am aware of one phone call. But I would have changed thinking it was calculating and I just got to make this change, I got to do what they're asking me to do. But when 3 months later, when I go to do the next sales tax return, I'm looking and taking extra care, trying not to make any calculation errors, but the instructions still tell me to put prepaid to my fuel suppliers, not my sold, not my collected, but my prepaid. And that's what I did. On top of that, and the biggest thing that we're contending is in the later audit, the 2010 after this audit in question, we did do line 20 with Eddie Iowa's instructions that were given to us in 2010. We did do that. I now had something in writing that I could substantially change and falsify that line 20, which I did. We went through a complete audit that was scrutinized by the state board not only once but 3 times. Twice by the auditor's direct supervisor, and then again, when it finally went to the state board in Sacramento, they sent it back and had him audit districts, which had not happened in the second audit or it hadn't happened on the third audit either, which continued growing our credit, which is what we've said all along via Connie Norton's own schedule to our books, that we paid every penny we collected. So the problem here is that the 6596 says you have to have failed to collect. We didn't do that. We did collect, but we paid the state. Connie Norton did an audit. It's required in the audit to do an audit of our collected and gave us a $13,000 credit more because we did pay everything. And they just said, they want us to give them money that they collected. Well, we did collect it, but we did pay the state board on these other types of errors, calculating errors, overstating sales, offset of SGs, that there are no offsets in the audit in question where there should be, and there aren't. So the state board did get their money, proven by their own auditor who audited our general ledger and stated, we not only paid every penny we collected, we paid more. I think that's the biggest thing I can say here because I watched. The only point I had to balancing this SR return, because it is so confusing and convoluting and asking for one thing, wanting another, I had my collected account, which was electronically done by a very expensive industry-related system. That system took every penny off every invoice collected and put it into the sales tax account automatically. So if I didn't pay the state those funds, I would have had a debit on my books that would have been money we kept. But Connie Norton clearly checked that. We did not keep one penny. We actually overpaid what we collected. And that's the biggest problem and again, not once, they deny us, they say there isn't an audit, then 5 years later, 4 years later, they come back and say, we did do an audit, and you did it right, and you're saying you did it wrong, when their own paperwork clearly puts a category on us that is not card lock. But we did pay the state every penny that we collected.
Okay, so the BOE, so they said they collected it and they remitted it. So are you saying they have more money that they didn't remit?
Yes, so I understand what schedule she was referring to. She's referring to Schedule 12A-1A, I believe, in the audit work papers, and that's actually a separate issue. That's not the issue that we have in appeal before us. The issue in appeal is sales tax prepayments on non-retail sales. That schedule concerns sales tax collected on retail sales. So for example, on a sales and use tax return, you have line 19 and line 20. On line 19 is the total sales tax due. Line 20 is prepayments that you're claiming as paid, and that's the prepaid sales tax. And so the issue in appeal is line 20, the amounts that they claim that they prepaid. And the schedule that she's referring to is actually line 19. It's an entirely separate issue. That's not what we're discussing here. And so what the department is saying is that on Schedule G, she's entitled to deduct, and the title of the schedule is sales tax prepaid to a fuel supplier. She deducted that, and in addition, Port Petroleum also deducted amounts that they collected from a fuel supplier, and that's not what you're entitled to deduct. They're only allowed to deduct what was actually paid. So then we have a dichotomy there in what they're claiming they actually prepaid, not the total amount of sales tax that is due on the measure of tax.
Okay, my question was, did they collect more tax that they did not remit to the state?
So they collected, we did give them a refund, not a refund, we did show that there was some over collection and there was a credit. This issue here is prepaid sales tax. They're claiming a credit for what they collected from customers. And that has to be remitted to the state, and they did not remit that to the state. So if that answers your question, they did not remit. They're claiming a credit for prepaid sales tax as opposed to
I understand they're
remitting it.
claiming a credit on the return. I'm asking if they physically collected the tax and they were supposed to remit it to the state, so it's sitting in some bank account.
Right. Yes, they collected it from their customers. Yes, they have to remit it to the state per the statute. It was not, and it was not paid to the state because it was claimed as a credit, if that answers your question.
Yes.
Yeah.
So, to the taxpayers, you said you have your own separate account that you collect all the sales taxes in and you remit it all and you report it. Is there extra amounts? How much are we talking about? 186,000
Correct.
that's sitting in a bank account?
No. In fact, when he says I can't use that 12A-1A schedule, I was told by an auditor that that does clearly state what I'm saying. So I didn't know that. I was given that information. Port Petroleum would have had this huge debit sitting on their books that we were audited. We have CPAs that look at everything, and that was always my checkpoint. If I didn't have enough sitting there to take over 1 quarter, because it was always 2 quarters paid and 1 quarter not on our books.
Right.
If I didn't have that amount there that equaled a quarter's worth of liability, that was my checkpoint.
Right.
And why I didn't catch all the other types of errors, because they offset that debit. So it was paid, but it offset. What they're neglecting to tell you is the second audit, 2006 to 2008, was botched, totally botched. You know, and I think you probably have all that documentation. We don't have time, but it goes back to the first auditor coming in who got all the books and records. I set him up at our CPA's office and never heard from him again. 4 or 5 months later, I called over to the office and I said, "Is Kevin Nguyen there?" And they said, "No, he only came that one day. He's never been back." Well, then almost a year later is when Connie Norton came in, knowing that the statute of limitations was running out, and they were going to lose the ability to even do the audit. She rushed through this audit. She made her comments, and her comments go back to the first audit being wrongly audited, using the wrong method of auditing. She also noted that these returns need to be amended, and that they are, and that the first auditor was never able to do it, that she had to get further instructions post-dating our audit, and they keep saying that I should have known that. They even put it in their SDNR. Whether we told you in writing or verbal that you do not have relief of any liability because you are to do it right. I could read it word for word if you want, but that basically is, and that goes against the taxpayer's Bill of Rights. And so every stage of these DNRs, SDNRs, we have corrected them every single time, even to the point where they denied the audit over and over. Then when they said they finally got it, they lost it. That's in their SDNR. Then two more years later go by, and they start with this harassment that I did it right in that audit, which when I had those papers reviewed by someone a lot smarter than I am and understands a lot more than I do, he clearly said it does not prove that. And we got pulled off this docket today. We weren't going to be able to come to this hearing today after 8 years of this abuse on and on. And we went and we were able to get put back on because it just was absolutely absurd to pull us off again, because every time they use a different method of trying to make us, the taxpayer, guilty.
Okay, so I'm going to ask you again. Is $186,000 sitting in some bank account that you have?
Absolutely not.
Okay.
And we also submitted supplemental declarations that I mentioned that they've signed under penalty of perjury, indicating that they didn't pocket that money because of the inference that they have been unjustly enriched.
Okay. Ms. Stoller.
Just to the department, I definitely hear what the petitioners are saying, that they submitted the money, but are you saying that they did not, or are you saying because they have claimed a credit for that money, you're saying that?
Right. Yes, that's correct. I'm saying that the reason it wasn't paid is because they're claiming a credit against their taxes due, and the amount of the credit that they claimed was the amount that they actually had collected from their customers. So they collected it and then went around and claimed a credit for it, which on their return reduced the amount of tax that they had to pay, and that's why it was not paid to the state.
Okay, thank you.
Yeah. So-
Can I-
Member Stovall?
Yes, please, go right ahead.
But in the 2010, 2013 audit, and that's what they're not making any reference to, we corrected that method of doing prepaid. We did what they wanted, and we are still showing an overpayment of over $80,000. I don't know how else to tell them we did not hold any of their money. The problem is the paperwork is convoluted and confusing, even to your own auditors, stated over and over again. I wish they were here. I wish all of them were here. And that they asked for apples but want oranges. And that we did most definitely pay them because that second audit was botched and not completed, not scrutinized the way the third audit was. And all their scrutiny in that 2010-13 audit could not prove that we held up one penny. It proved the direct opposite.
Thank you very much.
I just heard something that might be helpful, maybe. I think the department has explained it pretty clearly. I don't necessarily see this as complicated, but I see how it could be complex when you engage in, when you have two different types of businesses creating two different issues, where you have a prepayment or where you collect the tax and then file a claim deduction, which subsequently reduces your tax liability in the subsequent period, which should not have been reduced because the deduction shouldn't have been allowed because there was no, it was claimed against non-taxable sales, which shouldn't have taken place. I get that, but it sounds to me like what the taxpayer is contending is that something to do not necessarily with this audit or the issue before us, but more with the subsequent audit, and that in the subsequent audit they believe that there is an overpayment in the subsequent audit, or something happened in the subsequent audit that they would like that to be taken under consideration, or the department got it wrong, or I'm asking the appellant. Well, yes.
We made the correction. We did what they wanted.
Let me ask the question. The error that occurred in 2008, you subsequently self-corrected again in 2010?
We corrected it due to the memo I received from Eddie Iowa.
And when did you make the correction?
It was 2010. He sent this to me April 29th, 2010, which the post-audit, which we're talking, was for 2010 to 13.
And how did you correct it? Did you correct it by
I corrected it.
When they say self-correcting, what happens is that self-correcting is perceived to be that you make an adjustment on your tax returns to offset another liability instead of filing a claim for refund, which it's just form over substance. But if there is an adjustment that took place in 2010,
Well, we're not asking for a refund of
No, I know.
Okay. The line 20 that was in question on the 2006-2008 audit, which they contend we did incorrectly, which according to this in 2010, we did it differently than this instruction.
You started reporting it properly?
Right.
Okay, got it. All right.
And have a huge $80,000 credit.
Which could happen, could be the case in 2010. I get it. No. To the department. Department?
Yes.
Oh, okay. I get the purpose, Mr. Angita, of following the dual determination to protect the statute. It's a fiduciary responsibility that the state has to the people of the state of California. I get that. The concern that the taxpayer raised, though, relative to you following the dual determination, protecting the statute, not acknowledging his appeal. And so it seems to me that we should acknowledge the appeal. For no other reasons, we should acknowledge it as an administrative protest. And so I would speculate that that would be the will of the board in order to give the taxpayer an opportunity to contest whatever they feel was inappropriately done. Okay. Further discussion, members? Member Harkey.
Well, I just wanted to know if there's any update on my question as to are they owed refunds at any point in time here? Because they were claiming, they gave me a little listing of all of their refunds. And so I did kind of want to know
Because he's netting.
what our records show if we have such an ongoing kind of ledger.
But I'm just looking at the most recent audit. There are numerous audit items that show.
Can you give us a
overpayment.
timeline? We're talking about 3 or 4 different
what's-
audits here. Most
Yeah.
recent.
Oh, we're talking.
Close that up. Go
Yes,
ahead.
just January 1st, 2010 to June 19th, 2013, when they closed out.
Right.
And the various line items show underpayments and overpayments where they clearly overpaid in some areas and underpaid in other areas. And the result on one of the accounts was basically a minor a small credit of $3,000 in
They're
measure.
saying they have $46,000 coming back from 2010 to 13.
Ms. Harkey, if I could add, it does appear as though there was a payment made of $46,517, and that amount is being held, and it looks like that is related to this account. But as I noted previously, we have payments made against this liability that total $86,668.86. Those are the amounts that I think the petitioner is indicating that we're withholding or retaining. Those were merely payments that they had made against this liability.
So the liability is not really a tax of 151, it's something less than that?
So the amount owed is less than that because of these payments. That's correct. So it looks like the balance owed is approximately $109,000, tax and interest included. There is no penalty.
And what is the tax and what is the interest?
So the tax is $151,193
Yeah, but what's
remaining.
out of the 109? Can you break that down? I'm sorry to ask you this, but I'm just kind of wondering what's left.
So I'm looking at our IRIS system now and show what it shows is a non-final liability of $113,793 remaining on this account, which consists of $64,524.67 tax and interest of $49,268.98.
Okay,
So
thank you.
total $113,793.65.
Okay, thank you.
Mr. Renner?
Yeah, I just wanted to kind of, one item that was brought up was the issue of delays in this process. And I just wanted to kind of help me walk through that a little bit in regards to the interest amounts then. You said that there was 200 or 2,700 days of process here that interest was applied, of which you would believe 1,144 should be relieved of interest. Is that close to what you had said? Does the 2,700 days that you're dealing with there already take out the days that the department has said that they have taken out for delay issues?
I didn't try to cross-check it. It probably does.
Okay. Okay. Let me ask, and then specifically, you said that there was a time period to which you communicated to the board that there was an eminent domain issue that really had nothing to do with the liability, but yet there was then created a delay in regards to the process with the board. Is that right?
Yes.
Okay. What was the amount of that delay?
I put out a chronology on pages 4 and 5 of my opening brief, and I'm looking for...
I think I've got it, and I couldn't find that particular specific description, I guess, is due to a notification of eminent domain. Find it here.
Yeah, I sent a letter on September 3rd, 2013, that Port Petroleum had ceased doing business. There was no new information provided in that letter, and I didn't ask for any further delay. I believe at that time the appeals conference had been August 19, 2012, and then the first decision was issued December 12, 2013. So my whole point is that the rules provide for a decision in 90 days. I appreciate the fact that there was certain delays just to respond and more information requested and things like that. But it kind of morphed into, I think, the department forgetting on this 90-day rule. And then I asked for, I believe, there's a rule about written confirmation by a chief or an assistant counsel that has been granted, and I've never been provided that ever permission was given. So I'm just saying that there's certain written rules that I, as a lawyer, would have followed, and then when I try to verify that they were followed by the department, we were never provided that information. And in fact, when Bruce Morgan and Catherine Wurst explained delays to, I believe, Ms. Chin, those memoranda were never provided to us, and I felt that created something beyond the regulation.
Let me ask the department, how many days of interest relief were provided for in this?
I believe there were about 13 months for from the audit period, and then from March, I believe, or March to December for the time it was with the appeals division. So is that over?
9 months. So 9 and 13.
9 and 13?
So 22 months in
22
total.
months.
And if I might add, that 9-month period does overlap the September 2013 eminent domain letter to which he referred.
Mm-hmm.
And the reason we chose March 13th of 2013 is because the earliest possible date on which the DNR would have been ready to write, excluding any delays in between, that we had a few small ones in between one person's response and then the next person's response. If we subtract all those out, the earliest the DNR would have been ready to write was December 12th. 90 days later would be March 13th or March 12th. So we're granting relief from and after, well, for that period between when the DNR could have been issued at its earliest point to the point at which it was actually issued. That's the 9 months explanation.
Well, and if I may only add.
Real quick.
The corrections I asked after getting the DNR was on December 31st, 2013. The supplemental DNR came out on June 14, 2014. Then I requested corrections on August 15, 2014, and then the second DNR came out July 21st, 2015. So that's almost a year in 2014, 2015 that the department is ignoring. And I appreciate people's workloads and everything, but the meter's running on my client to pay for the fact that they can't work faster. And that's what I think have a problem, my client has a problem with.
So during that, let me go back to the department. So during that year period, or appeals, during that year period of time, there were corrections that was requested by the taxpayer. Is that a typical kind of time response? 6 months to have the issue still working?
Probably appeals should answer for that because
Okay,
it's
go
in
ahead,
our
please,
shop.
please.
We received timely RFRs to our SDNRs, and then the protocol is to give a response, or give the opportunity to the other side a chance to respond. From the date it's then ready to write, we then have 90 days from that date to issue an SDNR. We were timely compliant with the SDNRs that got issued in this case. The last one that got issued was, I pulled it because we didn't have the correct analysis for 1705 in preparation for the last board hearing.
So you met all the time, you met the time schedules that you're required to meet?
Yes. The only delay that we had that we would apologize for is that 9-month period from when the DNR should have been issued to the time that it was issued.
That 9-month period is one that you already gave them interest credit for?
That's in our summary, and the table correctly reflects that.
Mr. Runner, if I may,
Go ahead.
to appeals, if you could do us a favor and provide the full description of the ABC and the DFGs and the FRAs and so forth for the benefit of the
That's true, it would be
taxpayer.
Okay, but I don't understand that question, I'm sorry.
That's my point.
RFR. We issue an SDNR, which is a supplemental decision and recommendation. Decision recommendation is the first one that comes out. If we get a timely request for reconsideration, which is a taxpayer pointing out something that they believe we got wrong, we call it an RFR, request for reconsideration. We issue a supplemental to address that, and we have something in writing for the parties. We got 2 RFRs in this case, so 2 SDNRs prompted by the taxpayer. I caused the last one.
Excellent, thank you. Member Ma.
Okay, so I'm going to go back to the auditor again and the auditor's advice to the taxpayers. Can we go back to that? So I to the taxpayer. Do you feel that the auditors in their audit reviewed the issue in question? And whether they found the issue, this Schedule G line 20 item, okay, did you fill out Schedule G line 20 during any of the audits?
All of them.
All of them. And did the auditor ask you to correct the line because it was incorrectly done in any of those audits?
In the appeal, the 2006 to 2008, when Connie Norton received James Coole's after she requested it from him, because she couldn't answer line 20 either. She then told me I needed to do line 20 differently. She couldn't explain to me at that point, which was in 2010, clearly, because it was confusing and convoluted to her, still, even after a 9-page memorandum. So she requested I talk to Eddie Iowa, and that's when he sent me a completely different set of instructions for doing line 20, which I then did, and that's where the 2010 to 2013 audit was done to the amended correction, and still, we are overpaid. There is nowhere at all that Port Petroleum kept the money. There were errors done in each audit. In the third audit, he caught much more than in the 2010 to 13 audit done by Lance Jackson. Every time his superior sent him back, which was twice at his level and once by the Sacramento level, the credit grew from like 20-some thousand to 46,700 by that time, along with the SG offsets that are not picked up in his audit, were not picked up in the second audit. And though if it had been, our credit in the second audit would have been much greater. If they had audited districts, it would have been substantially greater. and if Connie Norton really understood how to do the audit and had the time. Her time was running out. She had to put this, it was a constant rush with Connie because she was transferring to another, I think the Riverside office, and all she could do is do the paperwork that she had to do. She couldn't spend any more time going over SGs or districts or any other thing. And she had to submit this non-concurred. She did what she called a 414Z log, which she did in a statement summary on May 10th, and it said in there that these forms need to be revised. Lance Jackson, in my third audit, the 2010 to 2013, he said, I understand your frustration. If I was not up on all of this right now due to the fact that you are the talk of our office, by the way, I would not even have known how to audit you. He said, I think we only have 3 or 4 people at this time that could even possibly come out and do this audit.
Okay, but the audit in question right now is the 06 to 08.
Yes.
Right? And then the subsequent audit in 010 to 013, they corrected it based on Eddie's email.
Except that we have the intermediary period, or that FBO period that we were talking about from.
What's FBO?
Field billing order period.
Okay.
From 1997. So during that time period, we were able to reconcile the allowed credit for sales tax prepaid to fuel suppliers with the reported prepaid sales tax collected from the taxpayer.
Okay,
so
during that audit,
yes, during that
did you
time
audit
period.
the Schedule G? Did they have a Schedule G line 20?
Yes.
And did the auditor make any adjustments? Or
No.
ask the taxpayer to make adjustment because they incorrectly filed?
No.
Okay.
My understanding is there was a period in time where possibly the taxpayer requested a copy of the previous audit in order to be able to examine the previous audit to determine if it was an error in law in which he would possibly be entitled to a 6596 relief if in fact that was provided, or a mechanical clerical error which wouldn't fall under 6596. At what time did the taxpayer make that request?
The taxpayer requested a copy of the prior to audit working papers on March 6, 2014, and the department provided the audit work papers on March 24th, 2014.
So repeat those dates again?
He requested it on March 6th, 2014, and the department responded and provided them on March 24th, 2014.
Can I just say that
So the department provided the taxpayer made the request for the previous audit, and the department provided it within.
That was about 18 days, I believe.
Well, it was a public record request that required compliance in 14 days, and then I think if they wanted an extension, but the point of that request was made because at the time they were saying that first audit.
My apologies, the only reason
That's all right.
I don't want you to trap yourself. I'm trying to be helpful. Had you requested the audit prior to the public records request?
No.
I did. to Connie Norton.
And when did you make that request?
Back in May of 2010, I believe, and she, in her own write-up, said the prior audit was not available.
Okay.
It's in her write-up.
And what caused you to the department, why, if that request occurred, why was there, presuming that a public record request is not necessary in order to get a copy of a previous audit, that there was some motivation on the part of the taxpayer to go to the extent of a public record request because they perceived that they had made a previous request and the department was not complying from their perspective.
I would note, first off, that we also provided a copy of the report of field audit on May 22nd, 1998. And as to their later request, I'm not sure why they were unable to find the work papers when she says that she requested it.
Our standard policy, though, would be to supply copies of audit work papers without a Public Records Act request. That's standard for us.
But it was denied that there even was one.
And in the audit working papers, you say that the auditor actually wrote that the audit working papers weren't available?
Mm-hmm.
You have a copy of that? You want one? Okay.
It's the list of no, that's not the missing, that's not where Connie wrote it.
Okay, well, while they're looking, department,
I was just also going to clarify that the board has been converting to electronic copies of records, so there might have been it might have been possible that the documents, the paper documents, were maybe misplaced during the conversion to keeping documents stored electronically.
okay. And what period of time was that? What period of time?
Right,
was
Mr.
that?
Horton, I tried to think of the period of time that would have related to. I think we started that conversion process about 3 years ago, 3 or 4 years ago. And so all paper records of audit work papers are being scanned and retained now digitally.
Okay. To the appellant.
I'm not sure I can find that right now, Mr. Norton.
It's in one of these.
Okay.
I think we're looking for a form that's in the exhibit book, but I haven't been able to identify which form to look for, so I'm sorry.
It's on the May 10th, 2010 supervisory comments.
That's exhibit 13001.
And it's the second to the last paragraph. Although the audit work papers were not available, it appears the board meeting for the claim for refund held on June 26, 1998, that the board and staff were unaware the taxpayer operated a card lock system. The audit approach and schedule is not the same for a card lock system as a gas station. This is, again, where she said the method of doing the first audit was incorrect by the only paper she had.
Ms.
And-
Richmond, can someone give that to the department?
I'm not sure what Ms. Gorman is reading from is the same exhibit I referenced. She's
To the
referring to
department.
another
I don't
exhibit.
see it. Yeah, just need them to look at it, verify it,
Same thing.
give us their perspective.
I think on exhibit 13001, it's actually the second paragraph where it says, oh, this was a normal audit selection. I think that's what she was reading from.
What are your thoughts?
I would clarify that the prior audit working papers do state that the gas station became, I'm just quoting, the gas station became a part of the CFN network card lock system on June 1995, and there were other references in the work papers to the Schedule Gs and that aspect. So
Yeah.
I think
I mean, I appreciate that, but, you know, my focus in that regard, to me, this clearly is a clerical error where they overstated their subsequent deductions, and mathematical as opposed to a point of law, lack of understanding of the law, how it relates to card lock facilities, how it relates to gas stations, and so forth. So I'm not asking those types of questions, but appreciate the clarification. I'm more concerned with the taxpayer having to request a copy of the previous audit pursuant to a public records request. I mean, you don't go there unless you're not getting it or someone didn't get it. And if that document indicates that the auditor stated that the
Mr.
working papers weren't available, and then if the testimony of the department that they may not have been available due to electronic transfer, that's an error on the part of the department that would have positioned the taxpayer at an earlier stage to make a call on this transaction.
Mr. Horton, I would just add that some taxpayer representatives actually file Public Record Acts requests for any books and records that relate to the audits that we perform. And so that actually is standard procedure for some representatives. Of course, it's not necessary. We provide
Fortunately,
copies.
they're right here in front of us.
Right.
So
we willingly supply
why did you file
copies.
it? Public records request.
Because I wasn't getting it anywhere else, and if they wouldn't, I wanted to get them committed to, if they don't have it, they don't have it. They were trying to say that first audit was a limited audit. That was their original staked out position. And yes, I believe the taxpayer had an absolute right to all these documents, but they had said they didn't have them. So I thought it would be a more formal request to ask for it in that manner, even though I didn't feel it was necessary.
You received two documents from the Board of Equalization via our representatives explaining the law and so forth. Has the department been able to receive those, review those documents?
I'm sorry, Mr. Horton, can you repeat your question?
The taxpayer's testimony is that they received an explanation from two different individuals. And that explanation, they point out, indicates the complexity of this audit. Has the department reviewed those explanations to assure that they're both correct and that we didn't issue advice that
There was an inaccurate, right. Well, we have looked at the information that was supplied by headquarters. We reviewed the most recent information that we had that's fairly contemporaneous with the period.
And I'll tell
we're
you, I'm
looking at.
actually going to, not this audit, but I am going to the subsequent audit as to whether or not, just to make sure that.
Right. It's our understanding, just based on the record, that the taxpayer had a clear understanding of how to report these transactions after they filed amended returns in this 1997 period, and that was a period following when the business started operating a card lock operation, which, as Mr. Mendel indicates, does add complexity to the sales and use tax obligations. Typically, what happens in instances of this sort, where we have policy and guidance coming out to the district and advising auditors on changes in audit methods or reviews of card lock facilities. In this case, our tax policy division will put out policy guidance to audit staff. That's what happened in 2009. And it's that document that they're referring to that Mr. Kuehl prepared in 2009. For the follow-on audit period, it appears that there were some questions that the district had concerning that audit period, and so they contacted a staff member within our audit determination and refund section who are very familiar with Schedule SGs and G schedules that get prepared in connection with card lock operations, it's that person that the taxpayer is responding to or referring to that they receive guidance from.
Okay. All right. Further discussion, members? Hearing none, is there a motion?
Take the matter under submission.
Member Harkey moves to take the matter under submission, second by Member Ma. Without objection, members?
Thank you.
Such a video. Ms. Richmond, what is our next matter?
Our next matter is item D, Special Taxes Appeals Hearing. Item D1, Almond Corporation, please come forward.
They asked for it in May. May of 2010, and they received it.
She had her purse on
That was a
the
previous
desk.
audit.
I know I saw your purse on the desk, the black one.
Yeah.
But then you left. I didn't see if you. Anyone see her purse?
She received a call from PAC.
Anybody here in
for the
this
audit.
room?
I believe the checks for all that. I should have.
Did you go to the restroom or?
I'm from here to the room, and when we left the room, I noticed it wasn't there.
What room?
The room, our back room.
Members, we're on record. Why don't we take a 5-minute break?
Okay.
Thank you, Ms. Richmond. Mr. Njiji, would you please introduce the issues in this case?
Mr. Chairman and members, the appeal before you presents one unresolved issue, which is whether the seized tobacco products should be forfeited.
Thank you. Welcome to the Board of Equalization. You have 10 minutes to make your presentation. We'd ask that you commence with your introduction for the record. Please be advised, we will return and allow you 5 minutes on rebuttal.
All right. Mr. Horton, the chairman, the board members, when we came today, we saw a lot of people coming in, been praying, hey, God, help us, been scared. I'm telling you the truth, me and my wife, we never been in that situation before. I saw people coming with big files, with a lot of attorneys. We don't have anybody to come with us, but we having God come with us. I saw you guys helping the taxpayers. We really appreciate that. When we saw that, we're having a lot of hopes. You guys gonna help us. We are, I got the file here. It's a small file. I have some exhibits. The first exhibit is a letter I write it for you guys. Hopefully you can understand my language. I got my kids to help me with it. I'm gonna read it to explain what the situation was. Dear members of the Board of Equalization, my name is Sharif Loza. I represent Almond Corporation, DBA Almond Smoke Shop Plus in the city of Menifee. My wife and I got a master's degree in business administration. We are American citizens who are Egyptian Coptic Orthodox Christian, and we are both servants at St. Thomas Orthodox Church. We have been teaching our kids and the church kids the importance of always doing the right things and being trustworthy and honest. By living by these principles, you should never get in trouble. I'm writing this letter in regards to the issue concerning the matter of the petition of release the seized property of Sublime Cigars. First, I want to give a brief explanation as to what exactly happened between the president of Sublime Cigars, Mr. Thomas, and I concerning this issue. We received a brochure in the mail from Sublime Cigars Company with some appealing deals. I have attached a copy of the brochure. It's exhibit number 2. Is everybody has it? Or?
Yes. Yes, thank you.
Okay, thank you, sir. I called the company and talked with the owner, Mr. Thomas, about whether we can order his cigars. At first, he asked if I can fax him our tobacco license, which means that the owner of Sublime Cigars Company, Mr. Thomas, knows that we are a retail store and we are not a wholesaler. Then I did fax him our California tobacco license, and we saw that everything was normal because the Sublime Cigar Company provide us with the same experience as other tobacco companies we have worked with in the past. Before we ordered anything, the Sublime Cigar Company asked about our license at first, which made us not have any suspicious impression. I have attached a copy of an email sent by another California retailer who has been deceived by Mr. Thomas Jeromersky and had become another one of his victims. And also attached is a statement from the same retailer providing his experience with Sublime Cigars, arguing the Board of Equalization to pursue legal action against Mr. Thomas Jeromersky, and that's in Exhibit 3. I got the 2 letters from him. It's right here. I called the owners of Sublime Cigar Company, Mr. Thomas, after he received our fax, and I asked him directly about the California tobacco tax, and he said all taxes are included on our total price. The deal with him was a check on delivery, where we give the check to the UPS driver. After receiving the cigars, once they are delivered. During that same time, my family and I had received news that my wife had a breast cancer. And we were so depressed and busy between the house and the hospital most of the time. This jeopardized our availability to be at the store when the cigars were delivered. My store manager systematically received the cigar upon delivery and saved the invoice in our invoice binder, as usual, and put the cigars in the cigar room for sale. On the inspection day, the inspector stated on the report, page 2, paragraph number from 5 to 7, ISOD found that the petitioner's cigarette inventory was properly stamped. Mr. Rafael, which was our manager, provided ISOD with purchase invoices, and ISOD's review of the purchase invoices and cigarette and tobacco products inventory was purchased tax paid, and that's on Exhibit 4. On paragraph 15 to 6, while reviewing the purchase invoice, ISOD found an invoice from an out-of-state supplier, Sublime Cigars, Exhibit 4. The inspectors found the invoice with all the other invoices. That means that we did not have any intention to hide anything or to do anything wrong. We got informed by the Board of Equalization inspectors that we shouldn't sell the Sublime Cigars because it doesn't show the taxes. We did not know that because we had strong belief that the California taxes was paid and it's included on the total purchase sale price, as Mr. Thomas Jaromski had told us. The owner of Sublime Cigars Company, Mr. Thomas, stated that he held a valid California distributor license, allowing him to sell tobacco product to out-of-state retailer located in California, and he asked us to check his website to see how many stores selling his cigars. I sent the owner of the Sublime Cigars Company, Mr. Thomas, and an email, and I faxed the email for him, asking him to send us the invoice showing how much California tax he had been holding and collecting from us, as he promised, and he stated he never replied or responded back. And I attached copy of the email. That's Exhibit number 5. After the inspectors finished the inspection, they forgot 2 cigar boxes at the store, and we found it, and I sent the store manager after them to give them the 2 extra cigar boxes, just to show the good face. When the inspector saw that, they told us that they will put that on their report, stating that we were so cooperative with them. As a result of the deceiving and misleading our company into buying from the owner of Sublime Cigars Company, Mr. Thomas Jaromski, and because of their greed, we filed a lawsuit against them at the Superior Court of California, Orange County, case number, and I added the case number and the reference number. And that Exhibit number 6. We had been audited by the Board of Equalization, and we were one of the rare cases that passed the audit without penalties. And I attached the copy of the congratulation letter we received from the Board of Equalization. We had passed all the inspections at our store by the County of Riverside, and I attached copy of the congratulation letter from the Riverside County. That's Exhibit number 8. In conclusion, according to the report of the Board of Equalization inspectors, we comply with all the Board of Equalization rules by holding a valid license and having all the invoices in place. We provide with evidence that we and others had been a victim of the owner of Sublime Cigars Company, Mr. Thomas Jaromski. We proved that we had been honest and helpful to the Board of Equalization inspectors and showed a good faith and honesty. We always passed all the audits and the inspection from different agencies. Dear all, We have been good citizens and good taxpayers and business owners with a very good reputation, but now we have been victim of a greedy company, and we tried really hard all these years to do the right things. With strong faith, we are seeking the people of the law to take the victim's side, and with your support, things will be put in the right place. Also, we are kindly requesting to acquire the cigar boxes that had been seized because we already paid the California tax on them, that which had been collected by Sublime Cigars Company and by the owner, Mr. Thomas Jaromski. And based of the foregoing, we are requesting to accepting our appeal. Thank you for your time, and God bless you all.
Thank you very much. Members, let us go to the department. The department has 10 minutes to make their presentation. We would ask that you commence with your introductions for the record. Thank you.
Thank you, Mr. Chairman, members of the board. I'm Pamela Mash from the board's legal department, along with Steve Smith and Jay Keflu representing staff. The tobacco products in custody cannot be returned because taxes were not paid on any of these products. Under the Cigarette and Tobacco Product Licensing Act law, when the board discovers that a retailer possesses tobacco products on which tax is due but has not been paid, the board is authorized to seize that product. And is presumed under the Licensing Act that tax hasn't been paid unless the retailer possessing the product provides a purchase invoice showing that it purchased tax-included product from a licensed distributor or wholesaler. Specifically, the Licensing Act requires that the invoice include the license numbers of both the seller and the purchaser, as well as the amount of tax due, or a statement that California tax has been included in the total amount of the invoice. In this case, all of the seized product was purchased from a Florida company that isn't licensed in California, and the one invoice we have doesn't support the release of the tobacco products in custody for multiple reasons. Neither the distributors nor the retailer's license numbers are listed on the invoice. The invoice doesn't list the amount of tax due to the board, and it doesn't include a statement that California taxes have been included in the total amount of the purchase. In fact, the invoice shows that the purchase was tax exempt. So the invoice doesn't comply with the invoice requirements of the Licensing Act, and it merely just serves to prove that tax wasn't paid. While petitioner contends that he thought tax was paid on the cigars, the fact remains that he hasn't established that he ever paid tax on any of the product remaining in custody. Again, the invoice clearly shows that tax wasn't paid. And because the distributor wasn't licensed in California, there was no way that he could have collected and remitted the tax to the board. Also, as a California retailer that's been licensed since 2008, it's the petitioner's responsibility to make sure that it's doing business with a licensed distributor. So petitioner knew or should have known that cigars purchased from an unlicensed out-of-state distributor would never be considered exempt from California tax, and that they would always be subject to tax. The board may order the release of the cigars only if it determines that they were illegally or erroneously seized. In this case, the cigars were clearly properly seized because they're untaxed and petitioner cannot legally possess them, so they cannot be returned. Thank you.
On rebuttal, please.
When we got the cigar, sir, we have strong belief it's been tax collected, California tax being paid, and it's including on the price. And we proved that on the email I sent to Mr. Thomas, the owner of that company. And I also attached a letter from different retailers. They've been through the same thing, the same deceiving from the same company with the same situation to prove what I'm saying right now. We already took the company in the federal court in California. We filed a lawsuit against them. We've been victim on that company. We've been good since we started the business. I'm not here just to ask for the cigar to get the cigar back. I don't care about the cigar. I'm caring about the reputation. I'm caring about the principle we live with. We did not do anything wrong. We paid tax on the cigars. The state board saying we did not know he did not pay tax as he stated and as he claimed, just to get us buying from him, just to get our money. So we have the strong belief we already paid tax for it. That's why we're thinking we should have it back.
Okay. Discussion, Member Ma.
Do you have an invoice or email from them saying taxes are paid, you know?
The way he track whoever buy from him, it's always by phone. He doesn't you cannot buy through his website. You have to call him personally to buy from him, and you order from the catalog. I asked him directly, what about California tax? And it's on my letter, and it's on the email I sent him, and he never replied back. That means he know what he did.
Okay.
And he said all the California tax, it's included. And he presented himself to me that he already licensed in California, so he can sell. And the way when you order something, the way you do, you call the company, you tell them you need to start buying from them. The first thing they're asking for is your tobacco license. So you fax them your tobacco license, just like the biggest company selling cigars here in California is Phillips and King. The first thing they do, and this is the main source for us to buy cigars, they're asking for your license. And we fax the tobacco license, they take a look at it, yes, we are a retailer, and they start selling to us. The same thing happened with this company. So we did not have any impression they do something or any suspicion about what they are doing.
But with Philip and King, right, when you buy cigars from them or when you started, what did they send you back? Did they send invoices to you?
Yeah,
or?
of course. They send an invoice. They send a cigar with the invoice. The only difference on the receipt they send, there is a part showing the taxes. On this company, they said the price, the whole total price, it's including taxes. So we do not have any suspicion about it. And it was first time we never bought from them before.
Okay, but when you say they said that the tax was included, where do they say that?
They said when I called him, he said that verbally. But when I emailed him with this fact, he never replied back. And the same situation happened with another retailer. And there is an email this retailer sent him, and they respond back, Mr. Thomas, to this retailer, and the retailer respond back to him again, showing the same situation. I have the letter here if you cannot find it.
Let's see. Dear sir. So the email from the president, Mr. Thomas Jaramirski, right? Is that the email to the Orange Hill Smoke Shop?
Yeah. The first email at the last page. The page before the last page. This
Okay.
is the first email.
All right. But then his response, he didn't say that the cigars include tax. It just said to Mr. Guergis, Carlos Guergis from Orange Hill Smoke Shop that you don't have the proper license to purchase from out of state. You need to have an authorized California state distributor's license. That's the reason the cigars were confiscated. They say they've been selling cigars to California for many years, but they are not in the business of advising tobacco store owners of their responsibilities to their state regarding licensing. By selling our cigars to you, we are assuming that you have all required licenses by your state to conduct business. Blaming us for your ignorance is just unfair. He will take down the name from the website. So it doesn't say that he sold cigars with tax.
No, he said he he sold cigar to retailers with no wholesaler license. So he knows that he been tricking us. All he did, all his goal, just to get money out of us. He doesn't care who buying from him. He's just doing everything just to get the sale done.
Well, but he says, with your retail tobacco license, you can only purchase tobacco products from authorized California state distributors.
So he knows.
If you want to purchase tobacco from a manufacturer outside your state, you're required to have a California state distribution license.
As far as he knows, okay, if you know that you cannot sell cigar to us, why you sold it to us?
So why did he ask for your retailer certificate, not your California
Exactly.
distribution
Why asking
license?
for
Is there a
our?
California distribution license also?
There is.
So why wouldn't this company ask for your, if they're out of state in Florida, shouldn't they have asked for the California distribution license?
No, it's not really their responsibility. It's the responsibility of the license holder in California to double check and make sure who they're dealing with in another state holds a license here and that they can buy from them. So for us, with the board, we have a website that lists all the names of all the licensed distributors that anybody in California who's a retailer could do business with, no problems with tax. They can call. They could ask that the out-of-state distributor for their California license number, and if that person doesn't provide it to them, then they know they can't do business with that person. But our reach doesn't extend to someone in Florida who has no license with us. It doesn't engage, in business here. So it's the California license holder here who's responsible for making sure they know who they're doing business with.
And so when these companies open, like their store, are they referred to a website, or do you send them documents, or is it pretty
In California?
self-explanatory? Yeah.
Yeah, we send them all kinds of publications and letters in the beginning when they open a permit with us or a license with us, explaining their duties and obligations as a license and permit holder in California. And we send updates all the time. I don't have all the publication numbers memorized, but we send them out all the time.
updates via email?
We
Or-
do them usually in mail. It's
Mail?
usually via mail. I think if we have email addresses, we can also do that, but I think everything is the address that we have on the record on their license.
Member,
Go ahead.
what might be helpful, maybe, if I'm understanding the appellant's testimony, can the department articulate if there's any criminal or civil liability as a result of this?
To this petitioner, there's no criminal liability. The product was seized, so he's out of the product. And then there's a administrative process that goes through related to his license. That's because he was cited for not having a proper invoices and for not having tax paid product on his
And are we currently in
premises.
that process?
Yeah, so what happens is this process ends, and then we have the citation process, and that's with a different branch of our group. And then that's where they decide they look at all the circumstances and decide if the violations should stand, and if so, what the consequences are.
Is this the first time his product was seized?
Yes, this is the first time and the first violation.
Generally speaking, when this is the first violation and the indication of willingness to comply, what happens in the administration process?
They take all the mitigating facts into consideration, and if there's a suspension that is possible or probable, they may be reduced, but I can't really speak to that because it's not what we're talking about today.
It seems to me that that's really
That's the
issue before us, or the concern. It's not before us, but certainly the concern as to the credibility of the taxpayer. And I was chuckling because I was looking at the flyer here from the Florida distributor, and it says, "We've got an offer you can't refuse."
Sent to the store, and it's a retail store.
So, just out of curiosity, without violating, I see the attorney looking at me, but without violating any privacy issues, have we observed problems with this particular distributor?
I am not 100% sure on that.
Okay.
If we are, and I can tell you in the past, we've had out-of-state unlicensed distributors where we've seen multiple retailers getting their products seized because of it. And what we've done is we've contacted that distributor and we've sent them a letter and said, you know, you're getting a lot of our retailers in trouble. We urge you to get a license or please stop selling to them. But at the end of the day, they don't really have to listen to us, so.
So they can commit fraud.
Well, I don't know that it's fraud because yeah, I mean, there's nothing on their website that says taxes included. They didn't put that on anything. In fact, the invoice that they have says tax exempt, so.
Yeah, they've dotted all the i's and crossed all the t's, but a verbal conversation could have been misleading.
Sure.
Some aggressive salesperson, maybe, I don't know. Member Harkey.
They don't care if they get their cigarettes back. They just don't want their reputation impugned, their business license. That doesn't do any of us any good. If they're selling product and they're paying their taxes, we want to keep them that way.
Sure.
So at what point, since they're in my district, can I get involved, quite honestly, in the next process to ensure that we just they seem very credible to me. And I would like, as long as they've lost the product that they paid for.
Sure.
That should be kind of penalty enough. And they seem credible, had no other issues.
So what'll?
Member Harkey, if I may, based on what I've heard from Member Ma and myself, I think the board is of an agreement that that the taxpayer was somewhat misled, despite the subsequent documents by maybe an aggressive salesperson of some sort, and would ask that the administrative process take in consideration the views of this body.
Well, I respect that, but I want to be sure I follow up, because just because they take our views doesn't mean they'll follow our lead. And I would like to ensure that there's no impugning of their record for something that seems to be a one-off error.
Sure. So after this proceeding, the time starts for the citation violation hearing, and that's with the Special Taxes, Property and Special Taxes Department. And I think what will happen is the petitioner will receive a letter stating what the violations are and what the process is. And they have an appeals hearing for that. And that would be the time where I think you would be able to get involved if
Okay.
you
I
wanted
wish
to have
some
a
of my
conversation.
staff were sitting here that would.
They are.
You are? Okay. I
They're
didn't see,
listening.
I didn't see Russell over there, pardon me, but I want to be sure that we don't, because the time is also money for these guys. And if
Sure.
they have to show up, take days off work, it's a huge process. So we'd like to at least weigh in early.
Sure. And I think those conferences they're either held by phone. I think they can be in person, but I think they're usually held by phone. But I can put your staff in touch with the appropriate person
That
to talk
would
to
be
with special
great.
taxes.
Thank
Sure.
you. Thank you. And I'm sorry for your loss.
Do you mind if I say something?
Not at all.
Do you think we can get like an expungement for it? We don't have it on our record? We've been victims.
That would be the ideal, but I'm not sure what I can commit to here. I don't know that I can commit to anything. That's why it's new to me. We will ensure that we do the best that we can. I think that once you go through an appeal, or if you start the appeal process, if you win in the appeal, then there's no record, and that would be a goal, to have you win the appeal be done. So my staff will
You've been
make
so
contact
helpful.
with you.
Thank you.
Thank you.
Further discussion, members?
She has it covered.
Okay. Thank you. There's a motion by Member Harkey to take the matter into submission. Second by Member Ma. Without objection, members, such would be the order. Thank you very much for appearing before us. It seems to be the consensus of the Board of Equalization
Thanks,
that
sir.
this was a situation where you possibly could have been misled by this particular vendor, causing the product to be appropriately seized under California law. Thank you.
Thanks.
Board will take your matter under submission later on this afternoon and send you a written report of our decision.
Thanks, sir.
Thank you.
Thank you.
Ms. Richmond?
That concludes our hearings for today. Next are those items that were taken under submission. Our first item is C2, Stainless Fixtures, Inc.
I will move.
Hold on.
Oh, you ready?
30.
30. And
Member Harkey moves 30.
for education and resources from BOE to be provided to ensure that the taxpayers fully understand their responsibilities.
Second by Member Ma. Without objection.
Clarification, if I might. Earlier, the discussion was to continue the hearing in addition to the 30.
Yes, and to continue the hearing.
Right. I'm sorry, that's not part of our 30 automatically, is it?
No, it's not.
Okay, thank you.
We could make it that way, but that's okay. We'll
If you direct us that that's how you want it interpreted, we could do that as the standard, and then you wouldn't have to specify, and we wouldn't have to interrupt you going forward. If you just tell me right now, I
My
can do
advice is leave it to the discretion of the board.
Yeah, we can.
You never know where they
You never know
may
when they
fall.
don't
know when we might change our mind.
Okay.
Yeah.
Don't want to see somebody anymore.
There's a motion and a second by Member Harkey, second by Member Ma. Clarification noted at the request of Mr. Njiji. Without objection, members, such would be the order. Ms. Richmond?
Our next item is C6, Petroleum Inc.
I move for the taxpayer.
Second.
Member Ma moves for the taxpayer to adopt staff, strike that. Moves for the taxpayer. Okay. Second by Member Runner. Objection noted.
To me, clearly there was just a lack of clarity in regards to the business, what the business activities were, confusion in regards to that process. I think that's what drives me. I'm not sure what other conclusion or whatever options we have in terms of trying to nuance a solution, but it seems to me that's what at least drives me to. I believe it's government's job to make clear direction. And there were enough hiccups in this process to me that we did not do that.
And, you know, they went through an audit, and the auditors did not inform the taxpayers that they were filing their Schedule G line 20 incorrectly. They continued that practice. I see that as written notification, or I don't know what the correct terms are, from the Board of Equalization until 2010, when she got an email from one of our staff members saying that she was not filing correctly, and so she amended the returns and filed according to what our board member staff informed her. And so for me, also, I think they did not get the work papers as requested to understand whether, you know, what was in the working papers for the auditor, and that also concerns me as well, that they would have been provided guidance earlier if there was something in the working papers, or if the auditor had told them in the audit that they were not filing correctly. So
I understand you guys' concerns, and I think there may have been some miscommunication, but I'm a no because they did collect the tax, and under 6596B3, you cannot get relief if you already collected the tax. I do sympathize with them, and I think that they're an excellent candidate for offering compromise and to have the tax substantially reduced to the offer and compromise program.
Yeah, I have similar concerns, member. I mean, there's a situation where the tax has been actually collected, and where the taxpayer has acknowledged that they've collected the tax and made a subsequent adjustment. And so we have an admission of that we've collected the tax from taxpayers, didn't turn it over, And now we're giving something back that, quite frankly, has already been paid off. I mean, quite frankly, I don't even know if we can legally do this, but certainly, maybe, Ms. Anjija, maybe you can assist the members. I mean, I'm still a no, but I do want to be helpful, and let's
May I
make
make
sure
a
that we provide some legal direction on how to accomplish what they want to accomplish.
Well, the testimony was that the audit advice was not erroneous. I understand your concern that if they were doing it wrong and an auditor doesn't tell them that, but 6596 requires that the auditor sees it and we have written evidence they examined it. In this case, they were given a schedule and the department reconstructed it to show that it was actually done correctly, so they were shown how. And then for that FBO period, that intervening period between the allegedly erroneous audit and the current one now, they properly did it based on the direction from the department. So we don't have reliance, or there's at least an intervening understanding of the proper way. So we don't have reasonable reliance on erroneous advice once you know the proper way to do it. Mr. Horton and Ms. Stowers have already noted that they did collect a tax, and the statute itself says relief is unavailable when you've collected it, and they've admitted that. We don't see how 6596 authorizes relief in this instance.
Could we, Member Harkey?
Thank you. I have had this all explained to me on board by board, whiteboard, because I said, well, where did this money go? How did it get there? And here's the deal. They did collect the dollars. They did remit the dollars, but then they also took a credit for the remittance. And because of that, and because of various offsets that occurred through the other audit that we heard, there was never a clear trace to the money that was supposed to stay, that the credit was given for. There was never a clear trace in the books because there was other things going in and out of it. And so I don't think that this error was by anyone's intention, but the fact does remain they did collect the taxes and they did they did remit them, but they got a credit for them. So I would have a problem going for a full refund, but I would like to do away with interest, and maybe I could make a substitute motion for that and see if we could have acceptance for that, because I think they were wrong.
Maker of the motion is acceptable to a substitute?
A substitute motion that the tax remains, but the interest is eradicated or removed, such that it's only tax. And I think then they're down to, quite honestly, well, I won't put that in my motion. That's my motion. I want to have the tax remain and the interest be exonerated.
Is that the outstanding interest?
All the outstanding interest, because I think there was a combination of errors and mistakes and late audits and inability to get the audit reports and just a variety of things. I don't think they set out to do anything wrong. I think it was just truly, it's just a kind of a messy situation compounded by several audits. And also the advice that they got and the written memos and it was very complex. So that would be my motion, substitute motion.
Moved by Member Harkey to grant relief of the interest amount, second by Member Ma. I'd concur with Members Ma's assessment as well as Member Harkey's assessment. The audit, having to subpoena the audit being requested in May of 2010, and not being provided until January, March of 2014, puts the taxpayer at an unreasonable delay in providing them with the information and the facts and the evidence necessary to have made a call. Had they been able to review the audit working papers, they may have made the appropriate call back in May of 2010. It wouldn't be here before us. And so that's an unreasonable delay in positioning the taxpayer at a totally disadvantage. I get the logic of the department, the reason and why all this happened, and it's indicative of just improving our technology, but the taxpayer shouldn't have to pay for that. So there's a motion in section.
Let me just real quickly comment to
Member
that. It seemed to me, in light of this discussion, it makes it so there needs to be a good look at that 6829 that's still hanging out there, too. I would want the staff to take a hard look at that issue.
So the motion?
We have it as a directive to accept that as an administrative protest, so there will be an appeal of that.
Okay.
So as far as I understand it, I don't know what power I have, but we'll make that happen.
So there's a motion and a second to the effect as articulated by Member Harkey, Member Ma. Objection, no objection noted. Such would be the order.
Our next matter is D1 Almond Corporation.
I'll move to support staff recommendation with a contingency that we get involved with the next part of the process, that my office is notified so that we can assist with the appeal process and try to ensure a equitable result for a first-time offense.
My only clarification would be that part of the involvement isn't part of this appeal that's in front of you.
Okay, then
So
I move to support staff's recommendation.
And then we'll fully take the rest of that as a directive as well, and I've already been in contact with the people in appeals that will be handling that appeal. So we're very well aware of the board's sentiment on that issue.
Member Harkey moves to deny the petition and adopt staff recommendation. Second by Member Stowar. Without objection, members, such will be the order. Mr. Richmond?
That concludes our business.
Members, I'd like to adjourn the meeting in memory of Jane Inoye. She passed away Monday, November 2nd, 2015. She worked, was one of our team members for the business tax representative in the use tax administration section, field operations department, represented this organization. Anyway, honorably, she did a fabulous job. She was just a jewel of a person to have around. She brought a lot of peace to the organization as well as those who she came in contact with, and she will be missed. To the family, we offer our condolences, and let it be the official record of the Board of Equalization that we have adjourned in her memory. With that, the meeting of the Board of Equalization is hereby adjourned.